Hello, hello, hello. Is anybody in the room?
Good afternoon. Good afternoon, guys.
Hi, Hadith. How are you today?
Greetings.
Good.
Mario, how are you today?
Things are immaculate.
Sounds good to me. On it. I'll take immaculate any day these days. For sure. Okay, so only the three of us are in the room so far. Where is everybody else? Trying to get out of traffic? Crystal.
Good afternoon.
Hi. Tanya,
Hi,
how are you?
I'm good.
Hey, great. You're back on the Titanic. That's good.
Yeah, so
That's good. It's not over until the fat lady sings. Daniel, did you send me my makeup?
yes, I did. I was having issues sending it off my phone, so I sent it off my work email.
Okay, that's fine. That's fine. As long as I got it.
Mm-hmm.
Perfect. Perfect. Did doing it all over again help you to understand things a little bit better?
It did.
Good, because that was exactly the idea. In addition to getting some extra credit, see?
Yes, sir.
So by doing it, you kill two birds with one shot, which is good. Okay, so let's give the others a few more moments and then we're going to begin without them. By the way, which week is this today? Anybody knows?
This should be the 11th.
All of that?
Yeah, we only have 3 more weeks, I think.
It should be the 11th or thereabouts. Let's see. Time passes quickly when you're having fun. Okay, let's see. 1, 2, 3. Yes, this is week number 11. Which means we have 2 more classes and a final exam in the next 3 weeks. So you guys have no room to have fun until after your final. After your final, then you can do all kinds of crazy stuff if you want. Okay, Mario is here, yes. Does anybody remember which day the final exam is going to be held?
On the 19th.
Yes, the 19th of April. Please make a note of that so you don't miss the day. Everything is going to be the same, go in the same building, the same room. Some other things are going to be the same, some other things are going to be some other things. All right. Let's see who else is on board this ship. Anya is here, yes. Way to go. Crystal.
Crystal was here. I know she's logged in.
Yeah, I see her name. She's gone off, I guess, to have coffee so she could survive this evening's debits and credits. Okay, week number 11. Unbelievable. Blaine, are you there yet? Okay. Denise. Veronique. Chanel. Okay. Well, we have a quorum. So we are going to get started one way or the other. Folks will just have to kick in. All right, by the way, how was the homework? Did anybody run into any? I didn't hear too many alarm bells go off, so I'm assuming that means that things went reasonably well. Anyone?
So Wilkinson, have a confession.
And your confession is?
I did not do your homework, but I understand the chapters that we went through, but I did not, I had a critical week this week, honestly. Last week was crazy. I made sure that I completed the makeup exam and everything.
That's
But
fine.
I was just too overwhelmed this week. But I understand the chapter and I'd still send it to you, but I haven't gotten a chance to review it as yet, honestly.
That's fine, as long as you send it to me.
That's fine, I will.
When will you send it?
I'll send it before our next, sometime during this week, because I'm traveling this entire week tomorrow for work. I'm on business and traveling, so it's going to be kind of difficult for me to even get a lot of stuff done with me traveling. But
Yeah.
I'll try my best to get it done. It's been
Okay.
rough.
That's fine. That's fine. As
Okay.
long as you get it in.
Yes, sir.
So you can get the credit that has been allotted to it, and of course, get the practice. That's the whole idea.
Yes, sir. I'm going to do the practice for sure.
The credit is secondary, the practice is primary. That's the point. Okay. Here we go. All right, well then, in that case, since there's no immediate screaming and shouting, let's get right into the rest of this chapter. Which chapter is this in again?
Well, it's our chapter 9. I think we may be doing receivables. I don't know
Well,
if we completed chapter 8.
Yeah, we're almost at the end of chapter 8, inventories. Remember we did all that LIFO, FIFO,
Yeah.
thing? Yeah. So I think folks kind of got the gist of that. And after your homework, it'll give you a better gist or a slight twist here and there for obvious reasons, just to get you to think a little bit about what you're doing. Accounting is a very analytical subject, and eventually and now and then it takes you into the thinking game. And there's absolutely nothing wrong with that at all. Okay. All right.
Mr. Wilkinson, good evening.
Okay, who said that? Let's see. Crystal.
Sir, I
Okay,
sent you an email, but I guess we could talk off the record because I needed some assistance.
Yes, I saw your note, and by all means we can do that. First opportunity. Today is Monday. When is your next free something, Crystal?
Any day this week.
Okay, that's where I want to get to any day.
In the evenings, yeah, same time.
Oh, in the evening.
Yes,
Okay,
sir.
let's say. Drop me a reminder on Wednesday day, and then I'll confirm if that's a good day.
Okay.
Okay, great.
Yes, sir.
Okay. All right, welcome aboard. So, yeah. The others will have to catch up. All right. Do you guys have the impact of inventory decisions in your text? A topic says impact of inventory decisions. Effects on financial statements. No? Man, that would be crazy.
Impact of inventory?
Yeah, the impact. The heading should look something like this: impact of inventory decisions. No?
I'm looking. Impact, yeah. Impact of inventory decisions on page 272.
Great, great. Okay, so I just need, well, first of all, the whole context here is that these inventory methods have different effects on the financial statements. You will learn more about that when you get into accounting too, about the extent to which these inventory costing systems would impact financial statements. Clearly, you would probably recognize by now that cost of goods sold and ending inventory will vary or differ depending on which of the four methods you use. And of course, at the end of the day, the cost of goods sold figure eventually pans out to be pretty much the same for each case, just that determining the cost of inventory will vary by method, and they all correct themselves within the following accounting period. But then all of that becomes clearer later on. The important thing is that you can calculate the cost of ending inventory and cost of goods sold using the four methods. That's the key point at this point. Okay, so Hadis, why don't you read that section? Impact of inventory decisions, table 8.1, or whatever it is in your text.
Okay, it says something about continuing with Boylan Company. That's where you want me to start?
Is that under impact of inventory decisions?
Yes, that's the first thing, under impact of inventory decisions.
That's fine.
Okay, so it says continuing with the Boylan Company example and assuming Boylan had April sales of $10,000, Exhibit 4 shows how the specific identification, average cost, Fifo and Lifo methods of pricing inventory affect gross margin. Differences in gross margin will affect net income to the same extent. So it shows a table here on the effects of inventory costing methods on gross margin.
Yeah, what is the amount you have under specific identification? Sales.
10,000.
Okay, so that's the same as my text as well.
Yeah.
So specific identification has sales of $10,000, and then by now I think and I hope we know that whenever we're dealing with inventory, that we have to come up with what we call cost of goods sold, so that we can determine gross profit for any particular accounting period. I also hope by now that most of us have learned the formula for cost of goods sold. Can anybody say it without looking? The formula for cost of goods sold?
Is the cost of good available for sale minus the ending inventory?
Well, not bad, even though you start in the middle.
Oh.
Actually, that's the end part, which is a start. But the cost of goods sold formula, if you look at this particular table, starts with what? Beginning inventory of how much?
1,600.
Plus purchases of how much?
11,100.
Equals cost of goods available for sale of
right.
12,700.
700. Yes.
In other words, if you start off at the beginning, that's what you brought over from the previous year, plus whatever purchases you made during this year, equals the amount of goods you have available to sell.
Right.
Okay. And then at the end of the year, when you do stock taking, we have ending inventory. So we subtract what we have left from the total amount we had. And so our less ending inventory in this example is equal to
5,460.
5,460. And remember, that is the first part of the inventory costing method that we studied last week for each of the following methods. So the ending inventory under specific ID is 5,460, which results in a cost of goods sold figure of
7,240.
And therefore a gross profit margin of
2,760.
Now, notice in each of the four methods, cost of goods sold varies, doesn't it?
Yeah.
It differs, which means that because cost of goods sold differs, what else will differ?
The gross margin.
Net income.
Yeah, the growth, well, eventually net income, but immediately gross margin will vary depending on the method that we use.
What page are we on?
Who's that?
It's Clinton. I just got in.
Yeah, somebody tell, what page are we on, someone?
272.
272.
Thank you, Mario.
Yeah, we're looking at that table. Let me just plug Clinton in. Yes, week number 11. Let the record show that Clinton made it to week number 11.
I crawled into week number 11 right now, to be honest.
I had a feeling that's why I made the announcement to keep you, to encourage you, like, Don't quit. Don't quit. We have 3 more classes left. Hang in there. I don't care if your guts are falling out. Sew them up until it's over, so to speak.
I learning, but I crawling. I just letting you know that.
That's okay. Remember the story about the hare and the tortoise? Do you know that story?
Yes, sir. Yes, sir.
If you know that story, then you will know that the race does not always go to the
Swift.
okay, but to he who endures to the
And
my. We're obviously never too young to learn either. All right, so don't worry about it. Keep on trucking. All right, so because of these 4 inventory costing methods, cost of goods sold figure will vary, and so will our gross profit margin, clearly. But at the end of the day, it all balances out in the next accounting period, and nobody's the worse off within any organization for choosing any of these methods. Any of these methods are acceptable for generally accepted accounting principle purposes. Organizations will choose the one they want based on the type of business they have. That's why they have these options. Anybody remembers what specific ID is good for? What kind of products?
High cost, high value,
Yeah.
sorry.
Like what, for example?
Jewelry.
Yeah, high cost jewelry, high-end vehicles, expensive paintings, anything that carries significant values and exists in small supply. Okay. What about average cost? Why would we choose that? Which kind of company?
I don't want to flip the page.
I don't mind if you flip the page. I want your textbook to look like you used it. Anyway, so flip the page.
Average cost. I want to say people who have, yeah, but then that's kind of a vague statement.
What type of company? What
I
type
was about to say people who have warehouses, but everybody has a warehouse.
Everybody has a warehouse. How about I give you a hint and say companies that sell homogeneous products?
Yes, products. You're talking about food stuff?
Could be, but not quite. Because food stuff is caught up in Fifo and Lifo
Things that are identical, but sometimes have different prices.
Okay, that could be a start. What about oil in the ground?
Dread.
Would that be great for average cost?
I would think so. Since
Yeah, you don't have to be specific about anything. It's all oil. So if you have 10 billion barrels at $50 a barrel, then you just average it, divide, and say the average is. Because it's all the same black muck. No variation, correct?
Makes sense.
Okay. So that kind of product and other stuff coming out of the ground, for example, will fall under average cost. That doesn't mean you can't use average cost for food store items. You could. You follow? You can use, you just don't want to use specific ID for the food store because you never finish taking inventory.
No, you wouldn't.
For sure. And of course, Fifo and Lifo we use as appropriate. It only assumes, of course, in each case that whatever comes in goes first, whatever comes in goes last. And again, whether it actually happens that way in practice, nobody knows for sure. Okay, it could, it may, it shoulda, coulda, shoulda. But either of the 4 methods are acceptable for determining the cost of ending inventory, which will ultimately determine gross profit. Okay, that's the thing you need to remember right now. Okay, keep going, Hadith. We're not done with that little discussion.
Okay, so underneath it says, keeping in mind that April was a period of rising prices, Exhibit 4 shows that LIFO, which charges the most recent and for boiling the highest prices to the cost of goods sold, resulted in the lowest gross margin. Conversely, FIFO, which charges the earliest and in this case the lowest prices to the cost of goods sold, produced the highest gross margin. The gross margin under the average cost method falls between the gross margins produced by LIFO and FIFO. During a period of declining prices, The LIFO method would produce a higher gross margin than the FIFO method because the cost of goods sold would be lower, thus the higher gross margin. Both methods have the greatest impact on gross margin during prolonged periods of price changes, whether up or down.
Interesting. So basically, depending on what's happening in the economy, whether we use FIFO or LIFO, we get a higher or lower gross profit. Now remember, what gives us a lower gross profit? Basically,
FIFO. It kind of depends on the time, you know.
Well, before we get to the costing method, if we have a higher cost of goods sold, that would give us a lower what?
Gross margin.
Gross margin.
Yeah, yes. And if we have a lower cost of goods sold, that will give us a
Higher gross margin.
correct. So if you were to go back and look at those things and analyze it, you'll see that wherever we have a high cost of goods sold, whichever costing method we use, we will end up with a lower gross margin.
Yeah.
And wherever we have a lower cost of goods sold, we end up with a higher gross margin.
Mm-hmm.
Now, here's how this becomes interesting for financial statements, in case you were wondering. And again, all the analytical stuff will come later, but I'm just kind of warming you up, okay? Since you went through all that step last week, learning those 4 methods of inventory costing. And we're not done yet because we have the perpetual method to look at as well. Last week was only the periodic. Today, we're going to finish up by looking at the perpetual system, which is similar with some slight differences, okay? But imagine you're a multi-million-dollar company and you want to save on taxes. Do you want a higher gross margin or a lower gross margin?
Lower.
Lower.
Why?
Because the higher it is, the more you pay in tax.
Correct. Which means that those companies that seek to pay lower taxes in any particular year will choose the costing method that produces what? A lower income, net income.
Yeah.
You follow?
Yeah.
And this is one of the determinants as to which method a company might use. So again, different companies have different objectives, and depending on their objectives, they will use the costing method that suits the situation. Okay. All right. Do you have the next heading, Cadiz, financial statements?
It says effects on the financial statements.
Yes.
Okay. As Exhibit 5 shows, the FIFO, LIFO, and average cost methods are widely used. Each method has its advantages and disadvantages. Amongst the factors managers should consider in choosing an inventory costing method are the trends of prices and the effects of each method on financial statements, income taxes, and cash flows. So there you have the Exhibit 5 that shows inventory costing methods used by large companies. So it looks like the majority of persons use the FIFO.
Yeah, depending on what's going on in the because remember, when we use FIFO, that says first in, first out, right?
Yes.
So that means whatever you bought first, you will sell first. Now, whatever is left,
sorry, we can't hear you. Someone's phone is
something is on. Whatever is left in inventory will be made up of the most recent prices. True or false?
Say it again.
Yeah.
Let's say you use FIFO. FIFO says whatever you bought first, you sell first.
Correct.
Which means that whatever is left in inventory at the end of the year will be made up of the most recent prices. True or false?
False.
False.
Why?
I know it was tricky.
Because if it's first in and it's first out, I mean the stuff of the most recent prices going out first.
Which means?
That the things that are left have more or less recent prices, if that makes sense.
Or lower prices.
That's what
In fact, In fact, what's left in inventory will consist of the earlier prices, which in an inflationary or rising prices will be lower than the current prices.
Yes.
Good,
You're,
good. And
Boy,
so,
you good. You
I tell
good.
you, I know you didn't ask a question. You're
You
going
good.
to fall in that trap first time. I
all
know you didn't come with no direct question of
So-
me.
now what will happen? So that means then that if you're applying the lower prices to ending inventory, that will give you a higher or lower cost of goods sold.
It's
Lower?
lower. Yeah, lower.
Well, before we get to lower, will that give us a higher or lower ending inventory?
Say the scenario again, because you know.
It'd be a lower one. It'd be
Let me follow
lower.
you.
Yeah, the goods remaining at the end of the year will be made up of earlier prices or lower prices in an inflationary environment.
A
True?
lower gross margin.
So if the ending inventory is made up, of lower prices, right? Correct?
Mhm.
What will be the cost of goods sold? A higher or lower amount?
Lower.
In the first out,
Yes.
the cost of goods
Higher.
sold will be higher.
Cost of goods sold will be higher because
Yeah.
a lower ending inventory.
Exactly.
A lower ending inventory will always give you a higher cost of goods sold.
Correct, exactly. Because when you take that away from, yeah, I get what you're saying. You take it away from the cost of goods available, it'll give you a higher cost of goods sold.
Oh.
I got you. I'm on board.
And then a higher cost of goods sold will give you a higher or lower gross margin.
A lower gross margin.
Absolutely. So in times of rising prices, companies are more likely to consider using FIFO
FIFO, okay.
if their goal is to what? Show lower taxes and pay less amount in taxes.
So it all depends on the goal of the company,
Of course.
the type of business they have.
Absolutely.
Okay.
Okay. They'll choose the one that they feel is
It's suited
best
for their company, yeah.
for their business. Yeah. All right, keep going.
As noted, inventory costing methods have different effects on the income statement and balance sheet. The LIFO method is best suited for the income statement when it matches revenues and the cost of goods sold, but it is not the best method for valuing inventory on the balance sheet, particularly during a prolonged period of price increases or decreases. FIFO, on the other hand, is well suited to the balance sheet because the ending inventory is closest to current values, thus giving a more realistic view of a company's current assets. Go on.
Yes.
So the heading here is effects on income taxes. The Internal Revenue Service governs how inventories must be valued for federal income tax purposes. IRS regulations give companies a wide choice of inventory costing methods, including specific identification, average cost, FIFO, and LIFO. Except when companies use the LIFO method, they may use the lower of cost or market rule. However, if a company wants to change the valuation method it uses for income tax purposes, it must have advance approval from the IRS. Oh, wow, interesting.
Yeah, because the IRS knows that they will use the appropriate method of costing to manipulate the amount of taxes that will be payable.
So you can, but you're still allowed to choose whatever you want, right?
Yes, you can choose whatever you want, but if you decide to change it, you need to speak with the IRS first. Okay. Now, did they say you need approval or did they say you need to speak with them? Which one?
Advance approval.
Aha. All right. You can't just change it willy-nilly because you have to provide the IRS, for example, with a suitable explanation as to why you're changing your costing methods. Because at the end of the day, the IRS wants to make sure that they maximize tax return collections, correct?
Yeah, and you got to be consistent.
And they know that companies are constantly looking for ways to manipulate tax liabilities. Okay? So they make it a little more difficult for you to make changes. You could, but you just have to convince them. And after you've convinced them and gotten their approval, then you can change from one method to another method, which means that some careful thought and consideration has to go into the process each time. All right, keep going.
A company should change its inventory method only if there's a good reason to do so. The company must show the nature and effect of the change in its financial statements. Many accountants believe that using the FIFO and average cost methods in periods of rising prices causes businesses to overstate their profit, resulting in excess income tax. Profit is overstated because the cost of goods sold is understated relative to current prices. Thus, the company must buy replacement inventory at higher prices and at the same time pay income taxes.
Now, under FIFO, is that in fact true in theory?
Yes, I think we talked about that last class.
Yeah, because see, remember, contrary to our earlier discussion, when we use FIFO,
You assume?
whatever's left in inventory at the end of the year will consist of what? Like we said, the most recent higher prices.
Right.
And this is why accountants feel that because of that, the current assets, which is inventory, will be overstated in the financial statements because the assumption is whatever is left is not really the cost that we're using currently in the market is not really the true cost because those inventory items were purchased earlier when the cost was lower. But because we have them left at the end of the year and the prices have risen and we're now applying the current higher prices, then we say that those inventory items that were purchased earlier are actually overstated today because they were purchased at a lower price a year ago or 6 months ago. Okay, so it's a very interesting situation that companies find themselves in. And this is why we say once you choose a method, choose carefully because the rule of consistency in accounting suggests that you cannot be switching up and down just because things didn't go that well last year. You choose a method and you stick with it until you have a good reason to do otherwise. Okay? All right. And then, of course, after that, you need to get approval from Uncle Sam. That's the other problem. So now you need to come up with a good reason to get Uncle Sam to approve it. And then you have to show Uncle Sam before approval the impact that your decision to change is going to have on the financial statement. Okay. So now you see why certain accountants get the big bucks because you don't just do this stuff overnight just because you have a feeling. It takes years of work and training and experience to get it all right, especially when you start approaching the tax collector with any kind of suggestions that might impact the level of tax collections in a particular country. They are never happy about that. All right, keep going.
During periods of rapid inflation, billions of dollars reported as profits and paid in income taxes were believed to be the result of the poor matching of current costs and revenues under FIFO and average cost methods. Consequently, many companies believing that prices would continue to rise switched to the LIFO inventory method. When a company uses the LIFO method for tax purposes, the IRS requires that it use the same method in its accounting records. Over a period of rising prices, a business that uses LIFO method may find that its inventory is valued at a figure far below what it currently pays for the same items. Management must monitor such a situation carefully. If it lets the inventory quantity at year-end fall below the level at the beginning of the year, the company will pay higher income taxes. Oh, wow.
Yeah.
Higher income before taxes results because the company expenses the historical cost of inventory, which are below current costs. I didn't know that.
Uh-huh. It happens. Okay, it happens. So we can see then that yes, you're free to choose any method, but we have to choose carefully. And the two main culprits, obviously, are FIFO and LIFO, depending on the increasing or decreasing, or what we call inflationary or deflationary prices in the economic system. In most countries around the world, prices are inflationary. They might drop here and there depending on any government decisions or whatever the case may be, but prices tend to continue to go up over time. And so companies tend to choose their costing method. Usually, again, the method will be based on their objective. That's really the point. Okay? Once they understand that FIFO is going to have a certain effect during rising prices, and LIFO is going to produce a certain result during rising prices, they make their choices in a manner that they feel is best for their companies. Okay? Some companies actually don't mind paying higher taxes for other reasons, known and unknown. It could vary. Okay, so it all depends, because if they decide to pay higher taxes for one reason, they might be doing it because of what they feel is an advantage somewhere else that is known only to them. All right, and then finally, Hadith, what about the effects on cash flows?
Generally speaking, a company's choice of average cost, FIFO or LIFO, does not affect cash flows. However, the choice of inventory method will affect the amount of income tax paid. Therefore, choosing a method that results in lower income will result in lower income taxes.
Yes.
Okay. In most other cases where there is a choice of accounting method, a company may choose different methods for income tax computations and financial reporting.
Yeah, so I think we kind of understand, especially with regards to FIFO and LIFO, and the reason for that is specific ID and average costing doesn't create nearly the same problems. They're closer to the reality, as opposed to FIFO and LIFO, which is not necessarily closer to the reality, depending on whether prices are rising or falling. Right. So again, the accounting department will look at the rising prices in a particular economy, and then they will decide based on the perceived increase in prices over time whether they'll choose LIFO or FIFO, determine at the end of the day why they're doing that, determine at the end of the day whether they want to pay the taxes associated with it or not, and then make the decision. Okay? The important thing is to know that these inventory costing methods impact cash flows, impact financial statements. Okay? That's the key. All right, so let's moving right along then to the final part of this particular chapter. Let me just share my screen just in case somebody wants to see where I'm going and what I'm doing. Share screen. All right, so previously we looked at calculating inventory under the periodic system, and now we're going to look at inventory cost under the perpetual system. It's going to be interesting to see the similarities and differences if there are any. And so you want to be on the lookout to see what shows up on the perpetual that might be similar to periodic or not so similar. Okay. So again, by the way, before we go any further, can somebody differentiate between the periodic inventory system and the perpetual system? What is the difference? Don't be bashful, let it rip.
Periodic, the periodic system is done periodically, which is normally done once a year at year end. And the perpetual system is done, the system automatically updates as they're sold.
Absolutely, yeah. Excellent. Couldn't have said it better myself. The perpetual system updates automatically each time a product is sold. Remember when we did the journal entries on the perpetual, we did 2 journal entries every time a product is sold. Anybody remembers that? I'm the only one who remembers that?
Yes, sir. I mean, I do. My mic is muted, sorry.
Yeah, and so those two entries under the perpetual system when we sell a product, what are those two entries, by the way? One entry is to do what, and one entry is to do what?
One is to record revenues.
Right?
And
The cost of goods sold.
Yeah, the other one is to record the cost of goods sold. Absolutely.
thank you to whomever that was.
Okay, way to go. And once that is done, we're done with posting and bringing all the inventory, the revenue, and the cost of goods sold positions up to date. That only occurs under perpetual. Under the periodic system, we make one entry for revenue, and then we make the adjustments when? When do we make the adjustments to cost of goods sold?
At the end of the year.
The end of the year, using which inventory method?
I think
Any one of four.
One of our choice? Sorry.
Yeah, any one of four, exactly.
Yeah.
Okay.
Boy, you almost catch me again. Oh.
Ah. Yeah, I wouldn't let you snooze off for sure. Okay, so under the perpetual system, we go back to data again. Okay, without data, we really can't get anything else done. In this example I'm looking at, it says we have the month of April, and some interesting things happened in April. On April the 1st, we have inventory of how much? From my text.
160 units.
At what cost?
$10.
From which period?
What do you mean by period exactly? Oh, you mean like perpetual and periodic?
No. Where did the 160 come from?
The previous
From
period.
the month before.
Yeah, the period before.
Yeah, the month before.
In other words, the ending inventory for March 31st, which is coming up soon, by the way, interestingly enough, is 160 units at $10, which you carry over to the new period, April the 1st, of 160 units at $10. How about that? What happened next in April?
They buy some.
Yeah, buy some stuff. How much?
440 units at $12.50 each.
Rising or falling prices?
Rising.
Aha. Then what happened on the 10th of April?
They made a sale for 560.
Okay.
They were not.
And then, did anything else happen in April?
They bought some more on the 25th for $14.
SE?
400 units.
Yeah, we bought some more.
LIC and SE?
We bought some more. Sorry.
Dictionary now?
Well, someone is having a class.
Yeah, somebody is multitasking in our session. Okie dokie. At $14. And then at the end of April, what happened?
They had 440 units left.
440 units left. Okay, well, let's see if we can prove that even before we go on. On April the 1st, we have 160, and then we purchased 440. How much is that?
600.
Coal?
600.
600, and then we sold 560. How much is left?
We have 40.
40 left.
What, 400 more?
That's why we get 440.
Okay, so now we see how that actually works. Okay, all right. So under the perpetual system then, which method do we start with in this example? According to my text, it's the average cost method.
Oh, okay.
Average cost method. Well, before that, they said something about the specific ID, right under the data. It says, the specific identification method produces the same inventory costs and cost of goods sold under the perpetual system.
So there's no difference between the two different methods. I mean,
No, absolutely. That's important.
Okay.
Okay, specific ID produces the same result. Okay, now it gets interesting when we get to average cost. Okay? We are told that average cost method uses a different approach under the perpetual and than the periodic system, and it produces different results. Under the periodic system, the average cost is computed for all goods available for sale during the period. On the perpetual, though, what happens?
It's computed after each purchase.
Yeah, an average is computed after each purchase or series of purchases.
I mean, those figures just change a lot.
Aha.
This, well, don't put this on the exam. I rather the periodic. Don't fool with this, Mr. Wilkinson.
Well, the problem is, this isn't
enough time.
Many companies use the perpetual system.
We ain't working for them companies.
So you don't know, you might be working for them tomorrow. Remember, jobs are not secure anymore. It can be anywhere, anytime these days.
This thing is staying in your head if you're only doing this every day.
No, it's not going to
They
stay.
say perpetual, I like if they're talking about a pet.
Believe you me.
I only notice now. Lord.
A lot of CPAs have long forgotten inventory costing. If they decide to go to work for a manufacturing company or merchandising company and they have to mess with inventory, they'll have to go back and brush off their textbook and do a refresher. Many of them, okay? Because many of them are in professions that are completely different from these kinds of things. Okay, a lot of them are in financial services and other areas, compliance and all this crazy stuff that are not related to inventory costing at all. So many of them professionally trained. It's out of their heads too, until they're forced to go back to refresher to see if they could recall a bloody thing about these inventory costing systems. Okay. All right. But you might find that it's not as bad as you think. For example, on April the 1st, our beginning inventory was 160, yes? Yes?
It was.
Yes.
I would answer, but there's a dog barking. Yeah.
And therefore, Mario?
Well, I guess I have no excuse. I'll be out.
Okay. So the cost of the inventory on April 1st is actually how much in total?
1,600.
And the cost of the purchases?
The 5,500.
Aha. So
Which means an average has to be computed.
what is the rule under the perpetual system?
After each, I mean, I never really read it, but based off everything we discussed just now, I would assume that the one you're referring to is that after each sale, the new average is computed.
After each purchase.
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 What about the sales?
Nothing about the sales yet. After each purchase.
They ain't reached sales yet. So after each purchase, there's an average. Wow.
Purchase, an average is calculated.
Well, that's far easier than after every sale.
Okay. So the first purchase was the 6th of April.
It was.
Okay. And after that purchase, the total amount, total cost of the inventory together was how much?
7,100.
And if we calculate the average, what do?
We divide. Just to be, well, there's the dog. Just to be clear, okay, this is kind of getting annoying. Just to be clear, you would divide this 7,100 by this 600 units.
That's what we always do, average.
Okay.
What does that give us?
That gives us 1183.
Boom. And that's why you have the price. Okay.
Yeah, so the new average computed is $11.83.
Okay.
Then notice we just follow it step by step. When we get to a purchase, We add up where we are and do the average cost per unit. Then we go to 10, sale. Now we selling how many units?
560 units we selling.
At what cost?
We can sell them at the new average computer cost, which is well $11.83.
Simple as that. See that? Everything looks like a big old headache instead you start dissecting it. Okay?
Yeah, but you gotta know what to dissect.
Yeah, that's why you come into these sessions while everybody's having fun and labor to find out how it works.
I'll take the
All right?
period.
Yeah. So we sell 560 units at 1183, which gives us a total amount of 16. How much is it? 6,000.
$6,625.
What does that represent?
The average amount of inventory, yeah. On that date.
Well, don't forget, you don't have to add anything to the description. On April the 10th, what happened?
Made a sale.
We made a sale on April the 10th.
Of how many units?
That's sales, that's money.
Of how many units?
560 units.
At what cost?
1183.
What journal entry would you make for that transaction?
What this is again?
Depends if they pay cash or credit.
We can debit cash.
Let's assume cash.
Oh, cash, okay.
We can debit cash for sure.
And credit.
And credit supplies or whatever this is.
Merchandise inventory.
Well, remember we said under the perpetual system, every time you sell something, you have to make 2 entries.
Cash.
Which entry is this one?
Cash and sales. And then merch.
No. Remember, we are selling 560 units at a cost of 1183.
Cost of complete. Now I'm a bit uncertain.
No need. Remember, under the perpetual system, every time you sell something, you need to make 2 different sets of journal entries. One for the sale and the other one for the
cost of goods.
Yeah, cost of goods sold. This one is cost of goods sold.
Hold on. So that means when in the entry where cash is debited, what has to be credited? Merchandise inventory or revenues?
Let's back off this for a moment. Go back in time a little bit. When we were doing journal entries under perpetual system, we said if we sold something for $1,000 and the cost of it was $600, we made 2 journal entries.
400. Oh. I remember that.
Now, what journal entry do we make for the sale of $1,000?
Yeah, I remember that. Oh my God.
Sale for cash, $1,000. What's the journal entry?
What?
You sold some goods for cash. What's the journal entry?
What?
You gotta debit cash. Gotta debit cash, man.
You sold the goods for cash, not credit.
Right.
What do you debit? What do you credit? $1,000.
Accounts receivable?
No, that's on credit.
That's
You're selling
on credit.
it.
Yeah, that's on cash. I mean, that's on credit. I remember us going over that.
What happens when you sell cash?
Didn't someone say debit cash and credit sales?
That was a question or a statement?
It was a statement. I mean, I said it.
Gotta be that.
So what's the journal entry?
The journal entry is the debit cash and credit the sales account.
That's how you want to say it. Look like
That's exactly how I want you to say it.
I said that. Oh my God, so long ago. You want me to know this wrong?
Accountants, we are accountants in here underneath.
Somebody will get that eventually. You have to start practicing early to be what you're going to be. So yes, somebody raised it like a question, so I ignored it because I want you to say it confidently, right or wrong. How's that? And furthermore, it's still not finished because without numbers, you cannot generalize anything. So if you tell me debit something and credit something else with no numbers, I'm still stuck.
Mm-hmm.
Okay, we go.
Let me say the transaction again. Sold goods for $1,000 cash.
Okay, so cash is going to be debited for 1,000, credit sales for 1,000.
That's how accountants speak.
Yes, sir.
Then we need to know.
Just like when you go to court, that's how lawyers speak. Your Grace, we are presenting for the plaintiff a petition that
No, they say my lady.
okay?
No, they say my lady.
Well, Your Grace leaves it to be anyone, male or female. Either one could be Your Grace. How about that? Because I know sooner or later it's going to be like, is it a male or female King Judge? But yeah, Your Grace would be male or female, but they have their own language. Then when you go to the police station, the police have their own language. You lock up or whatever they say. Okay? I can arrest you, but you around here or smoke dope around the police. That's their language. We all are, and accountants have our language. When you do a journal entry, you have to say the whole thing. You have to say what to debit and the amount, and what to credit and the amount. That's how accountants work, very specifically. Okay? So that's the journal entry for the sale. Now the cost of the goods happens to be $600. What's the journal entry under the perpetual system for the cost of goods side?
Someone got a what?
Anyone?
I'll just ask him before I,
No, you could take it.
Yeah, let it rip.
You got to debit the cost of goods sold for 600 and credit merchandise inventory for 600.
Thank you very much. And every time you sell something under the perpetual system, that's what you do. Now, going back to this page, the sale here is represented by the cost of goods, not the revenue sales. Because in inventory, we don't have any revenue going on. We have cost of goods.
Oh, wow.
That's the costing side. So that's $600 that Mario mentioned. That's the costing side that we're looking at now. So when we sell 560 units at a cost of 11.83, we are looking to make a journal entry for cost of goods sold based on that result. So given this result, what would be the cost of goods sold entry?
Think of it. 6,635.
That's the entry?
Sorry. Cost of goods sold would be debited for 6,625, and merchandise inventory would be credited for 6,625.
Absolutely.
On April 10th. So basically, it's what you said just now, but I just saying it again so it could make sense. You look at, or you take into account the cost method that the company is using when you are making your journal entries for their transactions under perpetual or periodic, what you call it, system. So basically, like when you're looking at their receipts and stuff, you see they made sales for this amount, whatever, and then you debit cash if they receive cash that day, or you debit accounts receivable if someone did a promissory note or something. But you don't have to like look on the receipt for the cost of goods sold, because based off the costing method that you're taking into account as you're like auditing them or doing whatever, you get the answer just by looking at how much units sold and the price they were sold each. Yes?
Theoretically, yes.
Cool.
In practice, we only do that for perpetual.
Okay.
Because it is only under the perpetual system that we record the cost of goods sold immediately when the sales occur.
Very true.
You get that?
I do.
So that cost of goods sold entry will only be made if you are using the perpetual system after each sale. Under periodic, we do not prepare a cost of goods sold entry. because inventory will be determined at the end of the year.
Okay, understood.
Okay.
Can I
Absolutely.
ask another question?
Yes.
So basically, when this book is being, okay, like how you said the questions at the end of the chapter, right? And you have to do a journal entry. When they're giving us the cost of goods sold, that's only because we study in the book, but in the real world, it don't work like that all the time.
For the perpetual system, it works that way all the time.
Oh, okay.
In other words, when you go to the cashier in a store, if the store is using the perpetual method, as soon as the sale is made, the system automatically calculates the cost of goods sold entry.
Oh, okay.
You understand?
I do.
And if it doesn't calculate the cost of goods sold entry immediately, it goes to accounting at the end of the day and they will process it. One or
So
the
they
other.
got to say
One way or the other. It's either done immediately when the sale is made in the cash register or end of day when everything is closed. One or the other.
Okay.
Absolutely. Okay. Remember, the reason why we have to do cost of goods sold entries each time we make a sale, that way, that's how we keep the inventory current. If we don't do that, then the inventory will have the wrong numbers in it. And it'll have the wrong dollar amounts if we don't do a cost of goods sold entry each time we sell something on the periodic. That's
And
the
you
rule.
get unstated things.
Along with some other problems. Okay, so we keep it simple by saying under the perpetual system, whenever you sell a product, you must have the system set up to prepare the cost of goods sold entry at the same time. Okay, for sure. So in other words, under the perpetual system, gross profit and gross margin is being calculated all the time automatically. Under periodic, it's not done until when? The end of the year. All right. So what else happened on the 10th of April? Anything?
It took a balance of what was left.
Yeah, on the 10th of April, we have to show the balance in the account of how many units?
40 units at $11.83 each.
Why is
So
it?
Sorry.
Yeah, go ahead.
So for 40 units at $475.
Well, first of all, why is it that the $40, 40 units is at $11.83 still?
Because it's an average cost method.
That's the balance with left from the inventory.
Until you make a purchase, that wouldn't change.
There's the key. Until you make a purchase according to the rule, the average of $11.83 will not change. Doggone it. Yeah. Rules are hell.
We're getting somewhere.
Absolutely. All right. So on the 25th of April, what happens?
They bought 400 units at $14.
Okay.
Which
And
means
therefore, on the 30th of April, the inventory that is remaining of 440 must be valued at
$13. Oh, sorry, $6,075.
And what is the average unit price?
$13.81.
How did we get that?
By taking the average of $11.83 and $14 from the previous balance. I lied. Sorry. By taking so on the 10th, they had a balance of 40 units valued at $11.83 each, which comes out to an average of 475. And then on the 25th, they made a purchase of 400 units at $14 each, which came out to a value of $5,600. So this new unit price of $13.81 is computed by 475 plus 5,600, and then you divide the total, which would be 6,075, by the total amount of remaining units, which is 440, and that's how you get the $13.81.
Absolutely. Couldn't say it better myself. That's exactly how it's done. So the cost of ending inventory under the perpetual system in this example would be equal to
$6,075.
35?
75.
Yeah, 6,075. And therefore, the cost of goods sold will then be
$6,625.
how come?
Yeah, you gotta explain this to me. That showed me,
Okay.
I couldn't wait to reach him.
That's what I try to figure out.
This come, how they get this here now?
Ah,
I mean, I see in the figures, but I need to understand how.
what did it say? The cost.
I see they add the 6,075. Hold on.
Oh, let's try
I
it.
don't know. I don't know how to get cost of goods sold.
This study notes say the average cost method produces different results under the perpetual periodic system. Under the periodic system, the average. Okay, that's not.
Oh, that's the difference. Under the periodic system, the average cost is computed for all goods available for sale during the period. But this one is different. Let me see what the catch is here. Our lecturer still here?
Say the cost of
Is our lecturer still in the class?
Yeah, but he's quiet. So I mean, we got.
He's gonna go on quiet. I know Mr. Wilkinson. He's right there trying anything to trip us up. He's just going.
I'm just right here listening to you guys be analytical. That's what this is all about.
Yeah, because I was right here looking and saying, you know, how is
So-
this? Okay, so under this method, the sale, the sale is the same thing as the cost of goods sold.
I believe that's what they said. Where did you see that?
I didn't see it. I'm just asking. I'm looking at the figures. I see where the 6625 is the same. They brought it down. So that's the relationship there. It's saying, so what if in April they had numerous sales?
Oh yeah. You know why? I can tell you why right now. Because you saw that same two entries what we just make, where one is be for what is called it? Where one is be for sale and the other one is be for cost of goods sold. The sale amount is equal to cost of goods sold because of the simple fact that is how we do the two entries. One for sales and one for cost of goods sold.
Absolutely.
Oh,
And remember, this part of the inventory costing is only the cost side. So whenever you make a sale, whatever you sell is cost of goods sold.
Boy.
So what just adds up? It continues to add up if they had numerous sales in April.
Yeah.
Oh, wow.
Remember, under the perpetual system, anytime you sell something, under the inventory costing method, the inventory side will become the cost of goods sold for each sale that is made under the inventory costing side. The revenue side is different. If you, for example, this sale of 560 units at 1183, that's the cost of the units, but that's not the selling price.
Oh.
What? Start over, please, because I lost.
I know it's funny we go in the stores and we do this stuff every day, but we don't really know what the heck's going on. Now you're going to know. The 560 units that were sold on which date?
On April 10th.
They were sold at what cost?
1183.
What is the selling price of the 560?
6,625.
No, that's what I'm trying to tell you.
That can't be that.
The 6625 is the cost of the 560 units.
The cost of whom?
Let me give you another example. If you guys go into business to sell lingerie, Mario and Doggone.
You know what is so ironic?
Okay?
I'm not going to speak about the weekend I just had, but please continue.
Let's say you guys go into
I know he was coming with something. Something off the wall.
Funny, I keep reading these guys' mind and their agendas because youngsters are always up to crazy stuff. Okay, so Mario and Clinton decide to go into a lingerie business. Mind you, they're not interested in selling lingerie at all. They're just trying to attract.
I'm not quite sure if it's Mario and Clinton.
Yeah. Okay. So if you're buying 10 lingerie pieces, guys, and the cost of the lingerie pieces to you
Okay.
is $6,625.
That's what I thought.
Would you sell it for that amount?
That's why I
No.
said it's the home. It's the cost of the company.
No.
See, but when you say sale, it kind of, I get what you're saying. Go ahead.
Would you sell it for $6,625?
No,
I'm
that's
selling
be
it
sold
for
for more.
$6,000.
Why wouldn't you sell it for that?
No
Because we
profit.
just be recycling the money.
You wouldn't even break even.
No
If you
profit.
look at it like that.
Because you had to pick that up. You had to pay gas. Something was going through. You
So
don't.
your cost was $6,625. And so what are you going to do? Mark it up, then sell it, right?
Mm-hmm.
So when we say sale of inventory, we mean sale of inventory at the cost of the inventory, not the.
Oh, so this
Right.
whole, all of these. So let me get this right. Wow. You know, all this time you're doing this, I didn't know that.
You're not alone. Students get stuck on it all the time.
No,
Yeah,
what I'm saying is, I didn't look at it. That's why I keep asking, who is the cost to? This cost, that's why I'm saying cost of goods. Oh my God, big dummy. Wow.
So can we calculate the cost of goods sold now? Because I still don't see that.
Let me calculate the cost of goods sold. It's the same thing I'm saying.
We calculate the cost of goods sold when we calculate the sale of 560 units at 1183.
Which was the 6,625.
Absolutely.
But you just said that in the cost of goods sold.
I did say it. I couldn't have
Yeah,
said
she
it.
is saying that that's the cost of goods sold to the company. Like, okay, that's what the company spent, but this ain't a markup price. This ain't actually what you sell. This is like, oh man, I understand, but it's so.
The 660.
All right, it's tricky.
So,
I
question.
get where she's coming from.
Yes,
It's not easy
yes.
to understand.
Yeah,
So they're
but I
not gonna
definitely
ask
think-
me for a cost of goods sold when I'm doing the perpetual inventory system under this?
If you're not going to be asked,
Are they gonna ask me for a cost of goods sold?
if you're asked to determine the cost of goods sold, what should you do based on this?
You would add up.
Basically the same thing, like what we just explained, what came to the 6,625.
Yes, you would take the number of units sold at the average cost calculated for those units, which in this case is 1183. That would be your cost of goods sold.
So the 11, okay.
I think I have a statement. What may help?
I understand. What are you saying? Let me see if I can.
I could try. I think
Go
I
on,
have
Mario.
Okay, so boom, right? So, so are you lost?
Okay, good teacher, but go ahead.
So this 5, the 5. Okay, so you see, this thing was like April 10th sale of 560 units, right? That word sale is referring to how much inventory left the company.
That's all it is.
That's
Right,
not
it ain't
necessarily
the money what
revenue.
you get. I think that's what's confusing for true.
It's literally the word sale. It's tricky.
Okay,
I
let me
try
see.
it. Tricky.
Denise. Denise, you get it?
I don't get it, but what I will do is I will just follow the procedure, learn the procedure, and I don't get it, but I'll follow the procedure.
All right, Denise,
I'll
let
learn
me
the
explain it.
procedure.
Let me explain it from my perspective. I can break it all the way down for you, darling.
Use prenatal every time.
Let me see if I can explain it. So let's say, for instance,
This should be interesting. Denise is going to break it down for Denise. Okay.
all right.
Denise.
So,
Denise.
so the first thing is the cost of goods sold. It ain't mean all the money that comes in. Like if you go to a store, right? You know, they have to mark up stuff. So basically the cost of goods sold, meaning what you spend or what you as the business owner spend. These prices are okay. When we look at this inventory on April 1st, that means they spend $10 on each of these 160 units, right?
Okay.
Now, when they sell, well, obviously, you know, we're doing the average, but when they sold, I was under the impression the same thing as you is, okay, someone walked in and they paid $11.83 for 560 units. That's not the case, according to Mr. Wilkinson. That's not the case here.
No, it's not the case, period.
Period. It's not the case, period, is what he is saying. And that's what he put in perspective for me. I'm so glad he pointed that out because I was really, that's why when I say cost of goods sold, to whom? It's not to, we didn't sell this for $11.83 to the person per unit. That's how much that's the cost of goods sold to the business. And then on top of that is an additional markup price. That's how I break it down. I hope that I'm able to clear it up a little bit for you.
Kind of, but I'm trying to figure out why are we asking for cost of goods sold
Exactly.
if that's not what we trying to find.
Really fine. Yeah. I get what you're saying.
Be careful. When we did the periodic system, we had to find the cost of goods sold every time. And the same thing applies to the perpetual system. We are trying to find the cost of goods sold every time. Remember, last week when we were doing the periodic, what we did was we said, we worked out the beginning inventory plus the purchases, less the ending inventory equals cost of goods sold. And we did that for each of the 4 costing methods. We had to find out cost of goods sold. And then after we calculated cost of goods sold, we were able to calculate gross margin. The periodic system is the same, it just uses a slightly different approach. For the periodic system, we still have to find cost of goods sold first.
Okay, so question, what if we had 2 or 3 sales for April?
Then together in aggregate, that will equal cost of goods sold.
Yeah. Okay.
Do you follow that?
Okay, so if there was a sale, I would add the sale for the 10th, the figure for the 10th, the 6,625, plus let's say the 25th was a sale for like 5,600. And then let's say the 30th was a sale for $6,075. I would add the 625, the 560, the 5,600 and $6,075.
Together?
And that will be the cost of goods sold.
Absolutely. So under the perpetual system then, for every sale you make, the sale is equal to cost of goods sold. Does that help?
That helps.
Yes. I think what throws students off every single time is the word sale. Because every time we hear sale, we think about the marked up price revenue sale.
So question. For instance, how we have the sale on the 10th.
Right.
And the question was to find the cost of goods sold. We didn't have to go any further than the 10th.
To find the cost of goods sold?
Yeah.
No.
Okay. Just wondering. I mean, I see it, but I'm just wondering.
No. Unless, of course, another sale occurred when? On
right, later on. Okay.
Yeah. Okay. In this case, we only had 1 sale on the 10th, but in practice, several sales may have occurred during the month or every day.
Right.
Absolutely. So we'd have to do it for the full month, and then everywhere we have a sale of inventory, that would represent cost of goods sold. Because remember, under the perpetual system, the accounting records are updated immediately. So whenever you sell something at the markup price, you also have to pass an entry to reduce your inventory at the cost price.
Let me ask you another question. Can you carry the slide up? I just want to see the first part of the, go up a little bit more, let me see. Okay, so in this is the periodic system, for instance, when we calculate the end totals, we combine them all, get a total figure, and divide the units by the figure that'll be the average figure or whatever cost. In the perpetual system, does the totals, does it add back up the way it does in the perpetual system?
No.
You understand?
I see your point. Remember, there's a rule under the perpetual system that doesn't apply under periodic. And what is that rule, anybody? We only, well, again, it depends on the method we use. For average cost, there's a rule. For the other two, there's a different process that may or may not be similar in some respects. See? So in other words, under the perpetual system, average costing, we calculate a new average every time we make a purchase.
Okay, so it'd be different.
Yes.
Okay, thank you.
Absolutely. Okay. So yeah, I see your point. They would be different. All right. So even though some of the steps appear similar, in both cases, there are some things that are different, like this one.
Okay.
Absolutely. The other thing that to keep in mind is under periodic systems, we don't calculate cost of goods sold until when? End of the year.
At the end, yeah. Okay.
Under perpetual, we calculate cost of goods sold after each sale.
After 7.
So
All
every
right.
sale, yeah, so every sale we make at cost is the cost of goods sold total for that sale. It's just that sometimes the word sale throws students off. Is it sale? Man, uh, how
Yeah.
could sale have a cost price? Shouldn't that be a markup? The answer is no. Every time we sell something out of inventory, then whatever the amount is, it has to be the cost. Because the only thing that is in inventory is what? The cost of the inventory, nothing else. Okay? That's why we have a separate inventory account on our financial statements. And everything in the inventory account is made up of the cost that we paid to purchase it. Once we purchase it, we're not going to sell it at cost, are we?
No.
Hell no. We're gonna add a markup, 50%, 100%, 9,000%. However we want to rob people. Sorry, I just use because some companies they really go too far in their markup. Okay. Sometimes you go to Super Value for like air freshener for the house. How much do they cost these days? Anybody know?
$350.
That's a cheap one even.
No, that's Glade. That is bad.
Oh yeah, Glade is a. But what about the other one in the silver, the gold can? What's that one?
Coal,
Starts with L.
Lysol,
How much is Lysol in the 21st century?
Whew.
11 or 12, something like that.
Some
Um,
places, yeah, $14, $15.
for Lysol these days. It was always expensive. Now, like my
Yeah,
grandma used to
they
say,
were
it's
nine
cost
something.
up. Yeah,
Yeah, they $12 now. So
yeah. Regular people can't even afford no bloody Lysol to kill 100% of the germs that come on TV, like they say. Because the markup on Lysol is extremely high. What would be interesting to know is what cost they pay for Lysol.
that's
See?
what I'm gonna say. You think it's the markup or is it the cost? I mean,
It's the
markup of big
markup.
money. Markup.
It's the markup, supply and demand.
Trust me, they're not going to pay. Let's say, for example, Lysol costs $15. They're not going to pay a markup of $11 just to make 15, $4 difference. Hell no. Their cost in bulk may have been about $5 or $6
But they
or
should be turning them
$7.
over. They should be turning them over quickly, so they shouldn't put it too high.
No, there's a certain market for Lysol. Just like when ladies go in ladies stores and some of those blouses you buy for like $250. If you go to New York, they pay $37 for them or something. Did you know that? Sometimes the markup in clothing stores, for example, because they know chicks, they don't worry too much about the cost. So they mark them up extremely high, especially if the outfit is cute, like it looks sexy, it fits somebody like, man, this fits me like no other. How much is it? They didn't pay anything. They start making up stuff along the way, even if the original price was $150, they said $350.
So,
And then you
Mr.
look at
Ferguson, the cost of goods would include any freight charges, all of that, right?
of course,
VAT, duty, all of that.
of course, same as we studied earlier. It
Right.
includes all costs.
All costs.
Okay, by all means.
Okay.
All right. So that's 6625 includes all costs, presumably. Now, if you choose not to include all your costs, dog eat your lunch, right?
Yeah.
Oh,
Your markup ain't gonna be that much because some of
But
them.
if you want to recover everything you spent and then make a profit, you will make sure to cover all the costs that you incurred. True or false?
Yes.
Absolutely. So this sale of 560 units at 1183 for a total of 6625, presumably that covers all the costs that this company incurred for those 560 units. But their markup is not going to be 6625. It's probably going to be twice or three times that, depending on whatever the company's markup is. So the selling price for those 560 units might be $15,000. Does everybody get that?
Yeah.
And the difference between the selling price and this cost of goods of 6625 would be the profit for the company.
Well, Mr. Wilkinson, how did they get this 1381? Is this just a random figure or what? For the ending?
No, it's not random. Remember the rule for average costing under the perpetual? Who remembers the rule?
Have to calculate the price after each sale.
We
The
calculated a new average
unit
unit
cost.
cost after each purchase. So the purchase before the 1381 was how much?
$14.
How many units?
400.
For a total of?
5,600.
Absolutely. So how many units did we have before that left?
40
At how much? What cost?
at 1183.
For a total cost of?
475.
Great. And so the 440 units at 1381 equals how much?
Is 6,075.
Now to answer your question, where the heck did the 1381 come from? Well, if we add the 475 and the 5,600 and divided by how many units, anyone?
440.
What does that give us?
6,075.
No, per unit.
Oh, 1381.
I see. Yeah. Okay.
Thank you very much for asking that. Don't assume anything and don't worry about Tingham and Tingham them. You always ask until you are absolutely, positively, bloody clear. Way to go. So I'm talking about the devil with blah, blah, blah. You always ask until you get it sorted out. Like, oh, that's where the hell that came from.
Okay.
All right. So that's the average cost method under perpetual. Now, which follows average cost? Which method?
LIFO.
FIFO.
This is confusing. Completely confusing for me.
It's serious. We just can't have debits and credits.
Like Mr. Wilkinson, like really? This inventory stressing me out.
Why? Because it's so simple. Why does it stress you?
Just some debits
Listen,
and credits.
I deal with numbers, but this inventory, we have to guess which unit sold, how much the unit was before. This is too much. This is a lot. I'm trying to get debit and credit and balance. Now I have to find out what the units was, average cost, find out the method. This is too much formulas. I feel like I just walking around like, I don't know.
And you know, the sad part about it is all these businesses basically using the perpetual inventory system, so it just updating as it goes.
Yeah.
All this hard work.
All this hard work is so that you can understand why they're using it, what's the result of it, and if you end up in a business where they're not using it.
Just show me what figures I need so I can put it in the system and calculate it.
Well, what you guys...
I know, I ain't getting off, don't mind me.
I know. What we would prefer would be this. Watch this. What we prefer is at the end of the year, for example, under periodic, that we do an inventory count, see, for what we have remaining in stock. And then for each category of stock, let's say cream, we have 5,000 cans of cream left. Then we go to the cream invoice and say, how much did we pay for cream? Well, during the beginning of the year, we paid 3, and the end of the year, we paid 4. So we add 3 and 4 is 7. So, okay, the average is 5,000 left divided by 7. And everybody go with that and be quiet. That would be an easy way to do it. They don't have to know LIFO, FIFO, this and that. But
I have a question. Would it be wrong in that scenario you just gave?
If it'll be wrong?
Uh-huh.
Not necessarily. It'll be a version of average costing.
Okay, that's what I'm thinking.
However, it would not be a generally accepted accounting practice. So while it could work, it will not be accurate according to the accountants and according to GAAP, and it will not conform to any of the 4 methods that they have prescribed for that purpose. For example, if somebody comes into the hospital for surgery, they can use a sterilized scalpel or a scissors to cut them open. No answer.
You were asking, or what they
Yeah,
use?
the point I'm making is they could use a scalpel, sterilized, or a scissors.
Oh, okay.
Which one? You see my
I
point?
think they use the sterilized scalpel.
If they have one.
Right.
But some people will act like they'll do the inventory and behave as if that they only have a scissors, like they have to cut the person open in the bush and they only have a scissors. See, like that.
Okay.
Easy way out rather than following the rules.
Wilkinson, they need to analyze our paychecks like this. How much did we get paid in this, that, and then okay, the balance was this. Like this
Okay
is
then.
then we use our salary like this perpetual system.
Yeah, absolutely. And see, that's the other thing. Because once you go through this headache, it starts making you think about other crap, like, you know what? What else can we apply this to that's not working or that can be changed? Absolutely. Okay. But it only appears that way initially. That's the nature of this stuff. Especially if you're new to it, it's like being new to anything. All right? It's like being pregnant for the first time. How's that, ladies? That's the best example I can think of. Like,
Yeah.
when you're pregnant for the second time, like you don't really have all the beef like you have like with this, because this is the first time. But so the first time with this is like being pregnant for the first time. Oh God, this is gonna kill me. And then when you discover that you didn't die, and they say, oh, I can do this 7 more times.
None of that.
I know.
All of them.
So some folks say 1 or nothing. Others say, man, I had 10, and if I'd have 3 more, and all this kind of crazy stuff they say. But yeah, it just depends on your level of familiarity, and the more you work it, trust me, the easier it becomes. So don't worry about it. Just keep on trucking. All right. So now, after all that, you now know that the sale of inventory has nothing to do with the selling of the product in terms of the revenue. It has only to do with the selling of the inventory at cost. That's all sales means there. And so any amount of sales you make in any period will always be equal to cost of goods sold. Do you follow?
Yes.
Yes. The key is to make sure that whenever you make a sale of inventory at cost, that the average cost method, in this case, that the average cost, 1183 or 1381, whatever, is the correct amount. See my point?
Yeah.
That's all.
So that when you say that your sales is equal to cost of goods sold at 1183, you're satisfied that the cost of goods sold figure is correct at 6625 because your 1183 average was done correctly according to the rule. That's the key. Sometimes, like I said, people don't follow the rules. They just do something quick and dirty, and they don't care until the auditors come in and say, "Excuse me, what method you use?" Say, "We use the quick and dirty method." And the auditor says, "Really? Well, we need to go back to basics then." All right? So it does happen in practice, depending on where it is. Imagine what method they use in places like China and certain parts of Africa where there's no doggone program. In some cases, whatever buck up goes. Okay? I was reading an article the other day. One of the big 4 auditing firms is trying to make arrangements to go into China to inspect some of their records, and they're having all the hell in the world to get permission from the Chinese government because they know that if one of those big auditing firms go in there to check the generally accepted accounting principles, they're going to find all kinds of wild and crazy stuff for sure. Okay. All right. So that's the weighted average method. Now we have FIFO. Now, when costing inventory with FIFO and LIFO methods, we are told it is necessary to keep track of the components of inventory at each step of the way. See, new rules now. But again, like everything else, once you follow the rules and you start doing it consistently, then it becomes easy. This stuff is just crazy to you now because like this is brand new. Like, what the hell is this? But I can assure you, after homework and 1 or 2 practice questions on your own, you'd be like, oh, okay.
No, that's okay. We get it.
All right. Notice you have to keep track of the components of inventory at each step of the way because as the sales are made, see, the cost must be assigned to the proper order. Same as we did earlier, except on the weighted average, as the sales are made, the sale is equal to the cost of goods sold. Now on the FIFO and LIFO, there's going to be a slight change. Okay, so let's look at FIFO. We might as well get over the pain of this crazy thing right now. And again, let's just break it down. On April 1, same inventory carried over, right? Right?
Yes.
Okay, everybody's tentative with this crazy stuff. On the 6th of April, what happened?
A purchase.
How many, what did we purchase?
From 440 units at 1250.
Yeah.
Love?
5,500.
Okay. And then on the 10th of April, what do we do?
We made 2 sales.
Okay, the first one?
160 at $10 and 400 at $12.50.
So when we sold the 160 at $10, that is, which inventory did that come from?
One that's brought over March 31st, the
Right.
first.
Why
March
did we,
31st? What?
not March. Yeah, from March 31st to April
Yeah,
1st.
March 31st.
Oh,
Last month.
Yes.
Yeah.
Why did we sell that first?
Because we on the
First
FIFO.
and first out.
Good.
That was brought in, that came in obviously early if it came over from the previous month.
The fact that it came over the previous month, yes. Why did we sell it first? Because we're using which method?
FIFO.
Yes. So we sell the 160 first at $10. And then the remainder of 400, we sell at?
1250
Where did that 400 come from?
The
from
second.
the purchase.
The purchase on the 6th.
Yeah, the April 6 purchases. See that? So now we sell 2 groups of inventory using FIFO. What came in first went first, what came in next went next. So the total sales figure is?
660, 6,600.
Which means that according to what we were talking about in average, using the average method, if we have a total sales, because somebody said earlier, what if it's multiple sales? Well, we have multiple sales now. And the multiple sales total how much? At cost?
6,600.
And therefore, according to the rules, sales are always equal to
Cost of goods.
under the perpetual system. Same as the weighted average.
Under both systems in the FIFO, the cost of goods sold are the same. You get the same amount, I realize.
Yes. But under periodic, the sales are not equal to cost of goods sold.
Yeah, I realize
Sales of inventory are only equal to cost of goods sold under the
that. Under the
perpetual
perpetual
system.
system. Okay. Wow.
Any questions so far?
He says.
Well, okay. Where the
Let me talk to
440,
Philip.
no,
Go
the
ahead.
440 units, April 6th at $12.50.
Right.
Get a pencil and paper.
I'm trying to understand. Okay, so that came from the same April 6th, the same method we used first, the average cost method. And then the sale, where did the 160 come from again? I'm sorry, where's this coming
The
from?
160
Yeah.
under FIFO, what came in in April 1st was sold first. So
That's
what
sorry.
So what came in on April 1st? First, how many units?
Are we starting with the inventory? This is where I get confused.
Yeah.
Yes, we're starting with the beginning inventory in the month.
Okay, so the 160 units at the $10, we're starting from that.
Because that is the first thing there for the month of April.
Right.
So we start there.
Okay, so the purchase now, for this is the first purchase. We're not starting with the first purchase, we're starting with the inventory.
Correct.
So why then?
But remember now, we didn't get to the sale of 160 until we had the purchase made.
Purchase made.
We have to follow it in sequence. Okay.
Mm-hmm.
Remember, in the real world, you wouldn't know anything about the 10th of April sale until the 10th of April. On April the 1st, the only thing you will know about is what?
The inventory, what came in.
Correct. And then on April 6th, the only thing you would know about is what?
The purchases.
And
what was left from the inventory?
absolutely. So when you add those two together, how many goods you have available for sale as on April the 6th?
The 160 and the 440?
Absolutely. Now comes April the 10th, 4 days later, the sale of inventory. How many units were sold in total?
Oh. Okay, I see.
Yeah,
Okay.
560.
560, yeah.
Yeah. However, out of the 560, we have to break it down based on FIFO. First in, first out. So what came in out of the 560? What came in first?
The 160.
Correct, at $10. And
10,
then,
right? And then the 400 at the 1250.
which came from where?
Which came from what, your purchases?
On which date?
What, on the 6th?
Absolutely. Simple as that. So,
but we didn't have 440 on the 6th. We made a sale, is what you're saying, of 160 and 400, which is 560.
well, before the sale, how many units did we have?
440. Before the sale?
Before the sale on the 10th, how many units did we have? Look at everything.
Oh, it's 600.
How did you get 600?
I'm looking at the balance here on April 6th, which is 600 units.
Well, before the sale on the 10th, how many units did you have in inventory?
160.
That's all?
That's why I'm confused.
Just follow my lead. Before the sale on April the 10th, what did you have at the beginning of the month?
160 units.
Did you make any purchases in April?
Yes.
How much?
440 units at 1250.
So as of the 6th of April, how many units did you have in your warehouse?
440.
Hell no.
At 600.
You have to add the inventory from March, which would be the 160.
Oh, the 160 plus the 448.
Right, that's how you get the 600 total in your warehouse.
Remember, when
But
April
I
1,
said 600.
Right, you was correct. He was just messing with you.
no, you were correct when you said 600, but I want you to see how they all connected. So as of April the 6th, you had 600 units in your warehouse, right?
Mm-hmm.
Then on the 10th of April, you sold 160 units first. And the FIFO, you will sell that at what cost?
The $10?
Correct. And then you sold another 400 units at $12.50. Where did they
Right.
come from?
That's from the purchases on the 6th, which was
Correct.
yeah.
Absolutely. And when you add those two sales up, they total
Yeah.
6600. And
Mhm.
remember, the sale of inventory is always equal to the cost of goods sold.
Yeah, I see now with that balance. Okay.
Absolutely. And your cost of goods sold on April the 10th was 160 at 10 and 400 at 12.50.
Yeah.
So after you sold the 560, how many units do you have left on April
40
the 10th?
units.
At what cost?
$12.50
Which came from where?
from my last sale. That's
Not the last sale.
um
Go back a little further. The 40 are left at 12.50 from where?
from the purchases, the first purchase.
Absolutely.
So I should be okay. Now I see.
Absolutely. So now all the 160 that you had at the beginning is gone, right?
Yeah.
And 400 of the 440 that you purchased on April the 6th is gone, correct?
Right.
So the only thing you have left on April the 10th is 40 units at 12.50.
Yeah.
Mm-hmm.
Wow.
Absolutely. I know it takes a little while to kind of get that for some reason. All right. So 40 units at 12.50 equals how much?
500.
500. Now, anything else happen in April?
With the ending inventory.
No, after the 10th of April, did anything else happen in April?
Oh yeah, we had another purchase.
How much?
400 units at $14.
That's right. For a total of?
5,600.
Indeed. Any other transactions in April?
No.
You sure?
Well, that was our last purchase. So that was the that's the last transaction I see.
Very
Inventory.
good.
Yeah.
Very good. All right. So now on April 30th, what is your inventory position?
We're left with the 40 units
At?
at $12.50.
Uh-huh. What else are you left with?
And overall, which is, I
Other than
guess,
the
now
40,
May
other than the
1st.
40 other than the 40 units at 12.50, what else are you left with?
We're left with 400 units at 14, which will be our cost of goods sold is what you're referring to.
But it will be 400 units at 1,400, which will be?
The 5,600.
So therefore, your total ending inventory in units are equal to? In units?
400.
In units?
440.
440, sorry. I'm
So
looking at
still getting
the
used
wrong
to?
thing. Yeah, because I didn't add the 40, right?
Correct. And then the total dollar value at the end of the month for your ending inventory is equal to?
The 2,650.
No.
You say, oh, sorry, I was adding the dollar value for the units. What was the question again?
Your total ending inventory for the units remaining. What's the total? The cost, the total cost for the 440 that's in inventory.
Oh, 6,100.
Absolutely. So if I were to say after you've gone through all that, question A, what is the total cost of your inventory at the end of April? What would you say? What is your ending inventory?
6,100.
Correct. And if I were to say B, what is your cost of goods sold for April?
6,600.
Kiss my foot. Wonders never cease. See, it works. You just have to work it. How about that?
Yeah, this method was a little tricky for me.
Welcome to the
Down
club.
like that. If you break it down like that for me to go through it, I was just trying to get my balances.
Yeah, I know. And that's fine
Um,
because that's why we have these sessions because most students, for a while, not only the first time, for a while, it takes a while to get it. So you are not unique. This is
yeah, I
the
was
hue
in
and
charge
cry.
of my inventory.
You are not unique. This is
Yeah.
the hue and cry of most first-time accounting students. Trust me, if everybody had just said it, we all get it, I'd be very surprised. It doesn't work that way. Okay? Everybody gets it at different points. That's
Mhm.
the point. So that's FIFO. First in, first out. LIFO is just the opposite now. Same principle though. For example, let's do it again. April 1, remember LIFO now. Inventory on April 1, how much?
Same thing, 160 at $10.
Now that's what I like to see. Now you're kind of bored with that. Same thing. That's the whole point.
Not already.
That's, that's what you want to get. Like a little earlier, like 15 minutes ago, you'd be like, what is it? You were very patient. Now you're like, oh, why you flicking ask me that again?
No, trust me, none
Yeah.
of the above.
That's how it is. So don't worry about it. You're right on cue. So I don't blame you. It's 160. Didn't we already do that? Yes, but we're doing LIFO now. But
Yeah,
some of it is the same. Okay? April the 6th, what happened?
All right. So now this last in.
No, not yet. What happened
Not
on
yet.
April the 6th?
Okay. Okay, so 440 units was purchased at $12.50.
Same as before.
Right.
Then on April 10th, something happened, but a slight change in numbers.
Yeah.
What happened on April the 10th? First. Just say what you see on April the 10th.
Oh, sorry.
First transaction.
440 units at $12.50.
So where did those 440 units come from? Using last in, first out.
Where did they come from?
How many units did you have on April the 1st?
The 160.
How many units did you purchase?
440.
Did you purchase the 440 first or last?
First.
First was April the 1st.
Oh, yeah, sorry. Now, see, this is where I'm saying we purchased. This is where we purchased. This is the second.
Yeah, on April the 6th, you purchased 440.
Right.
440 was purchased last.
Last, I should say, yeah. I keep saying second, last.
Under LIFO, if you sell 440 under LIFO, LIFO says whatever came in last, you sell first. So, what did you sell first?
Okay, 160 units.
That didn't come in last.
No.
The purchases on April 6th came in last.
Right.
So you have to sell them first.
Okay.
That's why we have sale on April 10th of 440 because they came in last.
Not the same unit, the same cost, 1250. Okay.
Okay. And then the remaining 120 units came from where? Well, we sold all of April 6th, didn't we?
Yeah, we did.
Yeah, all of April 6th was sold on April the 10th. So the remaining 120 units that were sold, where did they come from? You only have one set of inventory left after the 440 is sold.
Asking Crystal, right?
No, asking everybody.
I just thought, I thought he was, okay. So the 160 would come out of the 160.
120 would come out of the 160.
Leaving 40 balance at $10.
Do you see that? Do you see that the 120 that was sold came out of the 160?
Yeah.
You still sound doubtful though.
No, I'm trying to read, I mean, and understand, you know, the quickness of it. It's going to take me time just with practice, like you say. So I can't just answer without making sure I understand. I guess I was confident this FIFO now to get going into this LIFO method is a whole new different ball game.
Life was the same thing. Life was the same thing. You just flip the switch. You just having trouble flipping the switch.
Yeah, I am.
Okay, let's go back and try one more time. Flip the switch. LIFO. April 1, what do you have in inventory?
160 units at $10.
Okay. And then on April 6th, what did you do?
I made a purchase for 40 units at $12.50.
How many units do you now have after April 6th?
I don't have anything.
Are you kidding? Are you serious?
No, I have, oh, I see what you're saying now. 60 plus 600, okay.
Okay.
That's 600 units.
Yes. So you have 600 units available to sell. True or false?
That's correct.
Now, on April the 10th, how many units did you sell first?
440.
At what cost?
At $12.50.
Now, stick a pin. Under LIFO, the rule is whatever you purchase last, you sell first. What did you purchase last?
The 440 units?
Absolutely. Didn't you?
Mm-hmm.
So you sell them first. So they're gone. Right?
Mm-hmm.
How many units you have left?
That's my trick right there. This confusion right here, Mr. Wilkinson.
How many
right
units?
here.
How many
I
units?
see 120, but I'm trying to calculate how they get.
No. I know where you're going. Go back to the beginning. How much units did you start this month with?
I see 160.
Keep your eyes on it. Don't take your eyes off the 160.
Right.
On April the 6th, what did you do?
I made a purchase of 440 units.
How many,
right at $12.50.
How many pairs of shoes do you have now to sell?
I have 600.
All right. And on April the 10th, how many shoes did you sell?
I sold 440.
How many shoes do you have left?
160.
There you go. That's what I meant a minute ago. You have, I said to turn it into shoes and suddenly it becomes clear as sin.
Right.
Yes. So you have 160 pairs of shoes left, right?
All right.
Then on April the 10th, you also sold an additional 120 shoes.
Okay.
Where did you get them from? What inventory?
From the 160.
Absolutely. At what cost?
Okay. $10.
Absolutely. And so how many pairs of shoes do you have left in inventory unsold?
40.
At what cost?
$10.
Case closed. You are now officially on a roll.
Lord. Yeah, that hurting.
If it wasn't hurting, then it's supposed to hurt.
So, Mr. Wilkinson, when they ask you for the ending inventory, that would be 40 shoes at $10.
Who agrees with that?
I'm asking.
Ending inventory?
I know.
If we got off at April 10th, yeah. But
I mean,
No,
we haven't done anything after April 10th, so that's what I'm saying. At this point in time, we still on April 10th.
yes,
You
the
using-
balance will be Yeah, the balance will be
So
40
what,
units.
40
40
units at
at
$10.
$10.
what
Yes.
you have to be careful in accounting. If
Yeah.
you say,
Mm,
will the ending inventory be 40 units?
mm,
Then the accountant is thinking you mean
Yeah.
April the 30th inventory.
Right.
Now, if you want to say specifically what is the ending inventory after the April 10th sale, as at April the 10th, you have to say that very specifically. Then the accountant will say $40 as at April the 10th.
You know something, Mr. Wilkinson?
Mm-hmm.
This accountant,
mm.
because all along he wasn't doing nothing after April 10. Everything stopped at April. All of a sudden now we assuming it's up to April 10 and not the 30th. Where the rest of the days, where they come from? He was using up to the 10 all along.
No, be careful now. After we sold the 440 and the 120, how many units do we have left?
Sorry, after the what?
40.
After we sold the two sets of units, 440 and 120, how many do we have
We have
left
40 left.
40, right.
on April 10th?
Mhm.
But
40,
the month isn't over.
No.
Yeah, but no, that's what I was saying. We only worked up as far as the 10th. So if the question was to arise and then inventory, it would be 40 units at $10.
But that,
No,
hypothetically.
listen, if that's the final transaction, yes.
Right, that's what I'm saying. At April 10 is the final transaction. We haven't done anything prior after April 10th.
Have we
Yeah,
done
I see
anything
what you're
after
saying.
April 10th in this question?
Yes.
No,
Just a hypothetical question. Like if it was the last transaction, maybe that would have been.
No, I know what you mean.
Oh, okay.
She's saying if nothing happened after April 10th, would the balance be 40 units? Correct? Yes?
Yeah.
And the answer is yes.
Okay.
Absolutely.
So that balance will not say balance, it will say inventory.
Yes.
But yeah.
Okay. Assuming nothing else happens.
right. Okay.
All right.
Assuming,
So that April 10th balance here will then show up at the end of the month as inventory, 40 units, because nothing else happened.
Okay.
The Wilkinson, we really trying.
Remember, in accounting, we can't stop the month at the 10th. Even though there may be no more transactions, that 40 will not show up until the end of the month as 40. Inventory, 40 units. There's nothing else happened. You follow? And then we'll know that no other transactions occurred. So it'll be April 30th, inventory, 40 units at $10.
Balance. And then
Wilkinson, just don't give us plenty of these things, please, on the exam. We really trying to do better. Okay? So please, this LIFO, FIFO, whatever. I'm just saying, please help the sisters out. You spoke of the gentlemen, I help the sisters out. Okay? Please don't give us plenty of this LIFO and FIFO methods on the exam. Oh my Lord.
It's crazy. Students always get a sense of total mental block when it comes to LIFO and FIFO for some reason.
I'm telling you, I get work.
Even with weighted average, with average method, folks are like, really? I should do the average at every time I purchase, and really? And then they get stuck on that too. But yeah, trust me, you're not unique. Students always battle sometimes with LIFO, FIFO, and even weighted average. Okay. All right. I guess then that would make the remainder of this chapter a little weird because at the very bottom, we have this thing in accounting that has to do with evaluating inventory by estimating the value. In other words, there's a fire and we're trying to find out what the inventory is that got lost in the fire. So we have to try and estimate it so that we can make a claim for insurance. And accounting has a very specific method of doing that. So after LIFO, FIFO, and weighted average under periodic and perpetual, they finally decide to round out the text with a little discussion about estimating inventory value. And for those of you who have read this far already, you will have discovered that there are two methods. Anybody knows what the two methods are? No, nobody's gotten this far?
You just put on the screen.
Yeah, it's right there. The first
Retail.
method.
Retail method and gross profit method.
Yes, the retail method and the gross profit method. Now, folks, these methods are not difficult. In fact, they are far easier than Fifo and Lifo and weighted average. Okay, so don't let the expressions cause you to panic. These are far easier to do than Fifo and Lifo and weighted average. Okay, for example, if you look at my screen under the retail method of inventory estimation, you'll see there's a little table, again, that you need to be familiar with. But it's not a difficult table because we were looking at these formula type tables forever so far. For example, the first thing we do as accountants when we try to estimate inventory using the retail method is we go into Excel and we put a cost column and we put a retail column. Now, the data that is sitting in those columns would come from very specific areas of information, okay? This information will clearly be given to you, and all you need to do is go ahead and put them in their respective columns. And then you'll ask yourself, why did I even bother to panic? For example, let's look at the cost method first. And remember, the cost method is what the company actually paid for the goods. The retail method includes the what? The markup. That's all that means. One is the cost without markup, and one is the retail or resale value, which includes the markup. So let's look at the cost first, because we just finished costing anyway. Beginning inventory has a total dollar value cost of $80,000. And then to that, we add our purchases of $214,000, plus whatever freight cost. Where did this information come from? Documents that were available from the company. Maybe they didn't get burnt up. They found this information. So they're trying to estimate the cost of ending inventory for insurance purposes so they can make a claim. So in order to find out the cost of ending inventory, we have to go through the normal steps. Beginning with cost. Beginning inventory, 80,000. Plus purchases, 214,000. Plus freight, 6,000. Equals, anyone?
300,000.
What do we call it?
Goods available for sale.
That's available for sale. Makes sense. We take what we had at the beginning, add what we bought, and together it equals goods available for sale. Then, under the retail method, there's a little simple ratio that you're required to calculate in accounting. It's called the ratio of cost to retail price. Well, what is the cost figure that we're using here for the numerator?
300,000.
300,000 that we just got from goods available for sale, divided by the retail price of how much?
400,000.
Where did that come from?
Same thing on the retail method.
That's a markup.
Well, if we go to the retail side of the retail column, we'll see that the beginning inventory at retail was how much?
110,000.
And the purchases at retail?
290,000.
Any freight?
No.
Why wouldn't there be any freight at retail?
You don't get no markup on the freight in. Oh, let me see.
Because freight is usually part of the cost of the goods, not the selling price.
Right.
Okay?
Right. Yeah.
So there's no freight for the retail side.
Makes sense.
Absolutely. Goods available for sale under retail equals?
400,000.
That's the same 400,000 that we use for the ratio. Simple division once you figure that out, and the ratio equals?
75%.
75%. So the cost that we have estimated represents 75% of the retail price. If the cost is 75%, what do you think the markup is?
$110.
Sorry?
110. Gotta be.
110?
Could be.
Well, percentage-wise, you cannot exceed 100%.
25%.
20, who said 25?
Mm.
Yes, 25%.
Yeah.
Okay? Good stuff. All right. Now, once we have determined the ratio of cost to retail, then there are just 2 or 3 simple steps after that to come up with the estimated cost of ending inventory. And here's what we do. We take the net sales during the period, which we have found to be how much? How much are the net sales?
320,000.
320,000. And then we subtract that from what?
Ending. From goods available for sale.
At retail, correct?
Retail, yes.
Okay. And that gives us $80,000, which we call what?
Estimated ending inventory at retail.
Absolutely. So now we have our estimated ending inventory at retail, to which we apply the ratio. What was the ratio again earlier?
75%.
So how do you think we got the $60,000 estimated cost of ending inventory?
We calculated 75% of 80,000.
Absolutely. And it's as simple as that. Go to the insurance company, say you had a fire. This is your estimate of the claim, of what you believe your cost of ending inventory to be. Here's the evidence, pay. And then the insurance companies are always looking not to pay. But this is the method that we use to estimate ending inventory using the retail method.
I have a question.
Me
Yes.
too. Mm-hmm.
This 320,
Yeah. Same
where
question.
did that come from?
The sales general ledger.
Oh, so they give you that. In this instance, they give you that.
Yeah.
Okay. That's
Oh,
what
I thought you calculated it. Okay.
that's what I was
the
gonna
same
ask too.
thing. You on the same page.
No, that
Yeah.
comes from the general ledger sales.
That's sales. Okay.
Which is why it's important in accounting to keep your accounting records up to date by posting every day,
Yeah.
or at least once a week.
So you take the 320 from the 400,000.
Yes.
So you get the 80,000.
Yes.
75% of 80,000 is 60,000.
Absolutely.
Okay.
And that is our estimated ending inventory for the insurance company, for management, whoever needs to know. Okay.
Okay.
Absolutely. So it's not really difficult once you approach it. And then, of course, the gross profit method is supposed to be even easier. See that little squiggle in there on my screen? There's not even 2 columns here. There's just one little calculation. For example, beginning inventory at cost is how much?
100,000.
Yeah. Then purchases, including freight.
580,000.
Where do you think we get this 580,000 from?
Purchases at cost.
Go ahead. Where do we get that balance from?
580,000.
Yes. The general ledger account called purchases.
Oh, wow.
Why do you guys think you do all those journal entries and postings so that we can have the correct balances when we need them? See my point? All that other crap was not a waste of time to make you miserable. It is absolutely essential to the proper recording of financial information so that everything else in your financial information is correct and verifiable. How about that? So yeah, that came right from the general ledger purchases. And so when we take our beginning inventory plus what we purchase, our cost of goods available for sale equals
$680,000.
Now, once you have the goods available for sale, then we have a short interlude and then the final. Less estimated cost of goods sold. How do we come up with that estimated cost of goods sold? Simple. We take the sales at selling price, which is
800,000.
and that comes from where? The sales at selling price. Where does that 800,000 come from? Where do we find it?
In the GL.
Yeah, which is called sales.
Oh, I'm going to say that.
Yes, you're right, sales.
Sale account, man.
All right. And then from that selling price, the sales at selling price, we subtract estimated gross margin. And how do we come up with estimated gross margin? Because the company knows from experience year over year that its gross margin always equals roughly 30%. So what does it do? It takes the cost of goods available for sale, the selling price, the sales at selling price, and multiply by the gross margin percentage, which equals
240,000.
240,000. And when we subtract that gross margin from the selling price, we get 560,000, which represents what?
The estimated cost of goods sold.
Estimated cost of goods sold. And of course, once we get that figure, it's not a problem to come up with the estimated cost of ending inventory. We simply take the 560,000 from the goods available for sale as usual, and we come up with an ending inventory of estimate of $120,000. So at first sight, they seem like, oh God, more crap. But suddenly, and that 30% will be given because that is known to the company. You don't have to figure that out.
Right.
I was just about to ask. So insurance just take the word of the company that they say they make annually 50% of their estimated, the selling price. They just take the word from it for that.
They probably won't just take the word depending on what the amount of the claim is. If the claim is not material, they might and say provide some proof, some documentation, perhaps. If the claim is significant, they might require an audit to be done of the records that are being presented to the insurance company, and then the insurance company will look at the audited report and accept that more often than not as sufficient evidence that the information is correct.
Okay.
They're not likely to just take management's word, especially if a whole lot of money is involved.
Right, that's what I'm thinking.
No, they don't like to pay doggone $5,000 for the roof that fell in or something. They always say, oh, that's part of the deductible. Did you not read the fine print? The deductible is $8,000.
Take it easy on the insurance company now.
Oh.
They're skinning deep when they're taking your money, though. You premium every month.
With no claims. They just no claims.
Ever in your life.
A lot of bankers in here. You all know me starting. The bank is the crookedest. Anyway, sorry.
The jury is still out as to who is the crookedest of the two.
I think the bank win that one. When I look at my credit card statement just now, the bank win that one.
The jury is still out And who's the
If
person?
you're serious,
Right now,
thanks,
one.
Mr. Wilkinson. The jury is still out. I with you.
Or bloody insurance company.
This insurance is worse because
listen
when
to me.
you pay your house insurance for 30, 40 years and one disaster hit, they tell you, oh, you need to come up with 40,000 deductible.
Yes.
And you
Listen,
never claim in your
Never
life.
claim.
Never. And
one thing I learned about Bahamian people, they don't read. See these clause and things, they don't read.
yeah, but,
So why I need
sold so many
insurance?
policies.
No,
I sold so
no,
many
no.
policies.
we
Listen
are
to me.
not.
I am a salesperson. I'm just getting into all of this. So listen to me. 95%, Mr. Wilkinson, I gotta borrow your mic for a second. 95% of Bahamian people don't read. They don't read. So they only read, when the policy is sold to them, when it becomes a claim.
No, I have something to say about that, Hadith.
Oh boy.
You're right. You're right.
Okay, thank you.
People don't read. And
They don't read.
And 95% of insurance people don't tell. Listen carefully. 95% of Bahamians don't read, and 95% of insurance people don't tell Bahamians everything they need to know.
Thank you very much.
What are you, if you're investing your money into something, I mean, it's as simple as a contract. I'm telling you from experience. Bahamian people do not read. Insurance company over the years, they would have earned a horrible reputation because Bahamian people, number one, they don't read and they don't understand. I'm telling you. I'm not saying that sometimes Bahamian people are just, I don't understand. And then they go with that. And most people are so gullible. So if Grammy down the road say, I ain't get paid, oh, geez, the whole corner man.
Listen, we as professionals in any capacity have a duty to make clear everything that we're selling to clients.
I totally agree.
The problem is,
that's why when I go in that bank when I was 18 and they didn't tell me all our interest.
When you go on and sign on the dotted line,
they should have told me. They should have told me.
Like I said,
I learned the hard way. Now they don't get a dime off of me because if I swipe 1,000, I pay 1,000 the next
interest.
day.
So you pay more than 1,000.
I don't pay no interest to them. None.
Like I said, the jury is still out on who is the thingamiss.
I think the majority of what comes against insurance. No, but I think the majority of the bad things people hear about insurance company, the majority of it, not all. I'll be lying if I say all, because we do have some, agents. I think it's more so the agents and the company itself that can, leave out details that is very, very important for a client to know.
But I'll tell you, Hadith, the agents are not the only culprits, even though they do leave out important things. The agents are not only the culprits, like any other senior management team in most big organizations. Senior management have their little policy programs that are incongruent and not designed to benefit its clients.
Yes.
Well, that's not the case with my company. I can tell you that's not the case with my company. I know there's a lot of insurance companies.
How do you know?
That's refreshing to hear. If that is
that's not the case with my company, man.
However, that will have to be presented to me before a court. And
at least you win the blue diamond tonight because you representing well.
I can defend, darling. I can defend my company as a lawyer. I'm a loyal.
I know.
Family guardian is.
Well, I must say, family guardian is good though. I'm with you also. I have to attest to that.
Right. See, what I know about our founders, the president, they ain't do nothing. It only could be the agents. And me, I was a sales manager for 6 years. I can tell you, I manage agents, a lot of agents, and it's just managing them and making sure that they are not doing nothing unscrupulous.
Agents are always
doing sales. That's where the problem comes in. It ain't really the company. It's the agents because of the greed.
It's an interesting combo. Yeah, the jury's still out. But
I can't win, man. What's happening?
You will not get this jury vote.
Well, anyway, I can tell you Family Guardian is top notch in the Bahamas.
So since you guys are top notch, then let me ask you a question, Hadith. Oh, we're done with this bloody retail and other things, so I could stop here. Now, Hadith, since you guys do all that great stuff. Let me ask you a question. What are your homeowners insurance rates like?
Well, that's a totally different department, but I could tell you because I have my home insured with Family Guardian.
Okay.
The rate, it all depends on so many different things.
I do know.
Right?
Of course.
But I pay close to $3,000 a year.
I know, unfortunately.
That's staff discount?
And that ain't real property
that's,
tax yet? Sure.
let me tell you how they do with employees. If I go to any other company in the Bahamas, they either match it or give you a price less. So if you're looking for an insurance, you go all around and see what's the best price, and you tell them, hey, listen, insurance management charging me $2,000. They either they have to match it or beat it if they can.
Well,
that's
you
the
know,
policy with employees.
I had a client the other day who was shopping around, frustrated shopping around for home insurance. I think his home was worth somewhere around $300,000. And folks were trying to give him quotes like $4,500.
Yeah, in Nassau, I'm not from here. In Nassau, it's ridiculous. I could tell you, my home is in Exuma. I'm an Exumian born and raised. So Nassau, it's ridiculous. I can tell you the rates are really high.
Oh my God. Yeah.
Swampy, $250,000 home. That's in the, 300,000. There's a joke to some of the homes that I've been seeing, and they charge up to that same type of 4,000, 5,000.
Yeah, unbelievable.
I can tell you 14. I've seen quotes up to 14, 20. I mean, for homes, I'm not even talking about hotels. Yeah, it all depends. The type of roof, the proximity to the sea. It's just so many different factors.
Yeah.
That determines your rate.
Yeah, it's mind-boggling. And then if there's a hurricane in Timbuktu, they say the whole world is affected, even though we didn't have any hurricanes here. So your rate goes up because they had a hurricane in Hawaii or something.
Yeah.
So this crazy stuff. Yes.
The jury's still out? Y'all serious?
Home insurance is tricky because if you don't insure your home for the entire value, that's where the problem comes. Bahamians, we go to the bank. The bank says you only need 200,000 coverage. You only get 200,000. Mind you, the home value at 300. That's where the insurance company does get tricky with you. So my home, I insured it for the full value. You have to insure your home for the full value. Have to.
Well, some people can't afford to insure for the full value. That's the first thing. So here's what they do. That's what the insurance people don't tell you. I know. Here's what they do. If their home is valued $350,000 and they can't afford it, they insure it for $200,000.
Yeah.
So if their house burns down, how much will they get?
You only get 200,000.
Why not? Isn't that what you're paying premiums on?
Yeah, but it's just a lot of different factors.
The jury is
out. The jury, listen.
I don't work.
$60,000.
No, listen, guys. I don't work in the general insurance side. I have now I'm talking life and medical. Then I can tell you everything as it relates to life and medical.
I know what you mean.
So let me ask you this. Okay, boom, right? This is the youngin now. Because I've been listening.
All right,
so I have 3 questions. The first question is this. How do you guys feel about CG Atlantic? Whether it's health, life, home, car, whatever it is.
Who Atlantic?
CG Atlantic.
That's the form Atlantic Medical.
CG Atlantic is A1.
I see you talking about other insurance companies now.
Okay.
I can't relate mine with you.
People only know Family. Secret still them only know these big time insurance. If you want talking Family Guardian and probably Kalina or one of them, you don't even know about that.
Kalina don't go as far as CG Atlantic though.
But I know we own the best major medical in the country, and I get tested at Bahama Health. That's Family Guardian owned.
Yeah, Bahama Health is
anywhere in the world with
Bahama Health being around, yes, too. So yeah.
And Bahama Health is the best. I can tell you no word to lie.
Yeah, you pay for that too, though.
You will pay for it, but it's the best.
Okay, I mean, as long as you get your coin.
Exactly.
Anything in the world.
As long as you get your services. See, because a lot of these companies, insurance companies, charging you top dollars, just like Bahama Health. You go abroad, the card, this, that, they got a call all around the world. When I use my card in the US, they just tell me straight plain, they have no problems with Bahama Health. None.
Yeah. I'm with Atlantic Medical as well, and I had no issues with them either.
Atlantic is good too for their major medical.
Yeah,
I've heard
Atlantic
good things
Medical,
about them, in all honesty.
locally and internationally. like Bahama
Yeah.
Health, no problems there.
No problem. Yeah, some things you can't take from them.
The only
Yeah.
problem
Okay.
I have with insurance companies is that when you need insurance the most, it costs the most.
Yes.
Yeah, because
So this is
the
my
risk is
You
greater.
claim.
When you need it the most, the risk is higher.
I
Exactly.
You want
know.
me to
Claim.
insure you,
No,
and
see,
you want me to insure you and you 70? You can pay
no,
me for that.
why not?
Because you can pay me for that. Listen to me. I signed up this gentleman, I never forget. I'll share the story with you guys. He
We
was
know the story
60
about
something
the-
years old. He died in 7 days. I could not believe it.
wow.
He walked in my office and he told me he had an assistant. He told me he needed some insurance. Elderly guy. And in 7 days, he was dead.
Let me
How
tell
much
you,
you insured for these?
doesn't matter. That's
I
part
even know, because
no, that's
So
part
you
of
know
the
many
risk.
stories I've had like that?
It doesn't matter. That's part of the risk. I opened a newspaper
Yeah.
last week and I saw a 9-year-old boy died.
Well, you know,
Died.
by law,
No.
the insurance company, for policies within the first 2 years, insurance company has a right. It's
Which is
called a contestable period.
another criminal.
Yeah.
So if you die within the first 2 years, 9 out of 10, they're going to request a medical, because it's so unlikely, And in a lot of cases, we find that these persons have pre-existing conditions.
Train of people
A
go
lot
down
of
to
cases.
paying
No,
criminals.
man. And that's why y'all just make them take like 1 million deaths before y'all insure them.
Not in all cases, us and BAF are the only companies that offer what we call home services policies, which is 35,000 or less. So not in all cases, we don't do any, you don't have to prove insurable interest.
Yeah,
If
that
it's
ain't like Kalina.
under 35,000. No, we have the same thing as Kalina. Now, when you're talking $50,000 all the way up to 2 million, there are certain requirements. But when you're talking home services policies, we pay them little 10, 20, $30,000 off like every single minute of the day.
So
Because you don't have no insurable interest.
I submit
Prove it.
that. I submit them with all this crazy. See, when you're young and paying premiums, you don't need it, so you're wasting money. When you're old and need it, you can't afford it. It's
Okay,
a
so
Exactly.
no.
Exactly.
This-
But young
No
people
in
die,
between.
Mr. Wilkinson, I don't agree because I can tell you that so many, when I look at the claims that we've been paying out, I can tell you that so many young persons are dying.
No,
It is
I'm not-
unbelievable. The
I'm
old
not-
people aren't dying, They're
Mario,
young
get your
people.
insurance, Mario.
Then if the
Yeah,
old,
but see,
then if the
I'll
old
take
people-
Mr. Wilkinson.
listen, then if the old people are not dying anymore, reduce the premium and increase it on young people.
I still have 2 more questions. So.
The death mortality rate it is what they use to determine the rates, obviously.
I know.
So
I know.
every year they do a review. I think it's every year, every 2 years. But I'm telling you, it's just so many freak accidents. I wrote this guy up with some insurance personally, and he was in his car park, and a car came and hit his car, and he died.
Yeah, but that's part of the risk
In
of
about
it.
3 weeks.
That-
But the
that's
policy was paid. They had to pay it because But
Yeah.
they're gonna ask and check
But
everything they can.
folks, listen, insurance companies have been investing money to cover claims for decades. If
Yeah.
somebody dies unexpectedly, there's no problem. That money is supposed to already be in reserve from 1973 when the Bahamas became independent. So
Sorry.
yeah,
People paying the premiums on time.
Yeah,
So
because
they-
some people don't pay on time. You have some people believe that they should get paid, just like they believe if you don't pay a light bill, you get disconnected. Same thing.
Yeah.
And the reality is, insurance is one of the last bills a lot of Bahamians would pay.
well, you know what?
Not me.
Not
It's-
you, but a lot of Bahamians. I'm telling you.
Not
Let me
me.
tell you a secret. In Canada, they pay close to 50% in income tax. And one of the
wow.
reasons why that happens is because Canadians they pay for no education up to university and no
What?
medical.
Really?
What about burial?
Sweden is like
Do they
that,
have
I think
burial
too.
expenses? Do they have burial expenses?
Sweden is like that too.
Sweden is like that, yeah.
Okay? Now,
So do they
Is
have
it?
burial expenses?
well, nobody worries about if you don't want to bury them, leave them there and then let everybody get contaminated. Somebody will cover you when you're dead. For sure.
No, Mr. No. Wilkinson, you ain't.
What
Oh,
did you say
Lord.
is the style in Canada?
My concern is what do we have in place for the living? The
Yeah.
dead will bury the dead, just as Jesus said. Don't worry about it. My
No, I don't
concern
agree with
is
you.
what do we have in place for the living? Okay. Now we have this thing in the Bahamas called national health insurance that we're trying to get going. If we could afford, listen to me carefully. We just spent, they told me, $1 million to go to Dubai
1 million.
to do nonsense.
Yes.
And then we covered the cost of the royal visit.
Yes.
And such as.
Man.
And it rained the whole time they was here.
I don't care if it rained or snowed. I don't care. My thing is, all these millions that we're spending on foolishness, we could put it in a reserve to help Bahamians with their health bloody care.
I agree.
You know, the Bahamas is, you know, we can make as much, we can talk as much as we want to talk, but
I know. That's why we don't get anything
like that for so many years.
Yeah, I know. Maybe the next generation will stop talking and do something. Especially for Bahamians who work for what? 40, 50 years and become what? The elderly. What the hell the elderly is worrying about teeth and eye exam and all that nonsense for?
Yeah, medical is critical in the Bahamas. Oh, man.
You still don't get my point.
Our PMH is a mess.
What we need to do is tax the rich, put it in reserve, and pay the medical bills for the flicking elderly. That's what we need to do. Okay?
No, for true, because it's the rich who getting all the tax breaks.
Anyway.
When they bringing in their supplies and stuff, wholesale and thing, they getting all kind of break.
Folks, tax the banks, tax the insurance company, tax whomever you need to tax. Put part of it in a
don't tax the banks.
The gambling houses, tax them.
Especially them. Especially them. 80%. And let them play with the other 20. And put in reserve, along with education, especially healthcare, and most especially for those elderly people who have already contributed to society. What the hell are you worrying about? Hip replacement, teeth to go in, flicking eye exam and glasses. What kind of
medication every month? Wow.
Yes.
And some of their medication is be up to like $100-something per week.
See, you don't realize it until you become old and your income becomes limited. See, those of us who are rolling over in money, we have no sense of what it is. But if you're not rolling over in money, it's a completely different story.
Well, when you got to decide on which medication you're going to get this month.
Is that a debit or a credit?
Like a lot of credit.
All right.
Okay, so go on, right? Because I know like you're probably going to dwindle it.
So, yeah, we'll break on that bloody note. You guys go ahead. Anybody who has homework for me? Please.
Mario, sound like you need to get at these number.
Me?
I just have 2 questions.
You had some questions.
Quick and fast. Okay, so boom, right? So boom. So someone have mentioned the 40 grand deductible for the house. So how much do house repairs usually cost?
I'm not on the general side. Remember I tell you anything with life and medical? I can refer you to someone though.
No, they're not serious. And this is the last question. Do you guys think that paying health, what you call it, life insurance? Do you feel like paying whole life insurance from young is a scam? Or is it worth it? Or are you just wasting your money?
It is not a scam. That's the first thing.
So you use the insurance person.
What I want you to understand, Mario, I'll tell you this before we go. The insurance companies in the Bahamas are governed by the Insurance Commission of the Bahamas. You cannot just wake up and say, I'm not going to pay the claim, or we can do this or we can do that. I can speak for Family Guardian. I think that Family Guardian is the most law-abiding company in the Bahamas. The minute they are so afraid of whomever, I don't know if it's ICP or whomever, they stay within, they're not going to rip you off or crook you. All right? Now, what I would recommend, how much insurance you looking at?
No, it's just saying, it's like, people just be like, it's
not a rip-off. Oh, my person says it's a rip-off because they're upset that their claim was not payable. I'll tell you, Family Guardian has been around from 1965. We have lost only one. We have had to overturn one in the whole from 1965. Persons go to Insurance Commission, they have no case. Okay?
Sound like you was the president.
I can tell you because I work in sales because, clients come and they, their policy, the person I'll give you an illustration. If I have cancer, I go in to the insurance company the day the doctor diagnosed me in some instances. I know I have it. I died 2 years later. How do you expect me to pay that claim when your loved one did not tell the truth on the application? That happens a lot. You understand?
I don't know. I mean, I think a lot of people are disgruntled with insurance companies.
When that happens, you tell Grammy, Annie, everybody upset. So that contributes to a lot of the bad reputation insurance companies get. That right
That's
there.
only a small percentage though of these. A lot of people pay
Well, you know,
premiums
what else? Paying
and
premiums, if they pay premiums, the policy got to
for
be.
years, and when it's time to claim, you all only want to pay 15, 10%, 20% of what the
Of
people
the face amount?
paying. Come on
Of the
now,
face
come on.
amount?
People gotta be disgruntled now.
But
That's a rip-off.
Denise, I'll tell you like I always tell clients, if it ain't happened to you, I wouldn't repeat that. You see, you have to understand a lot of Bahamians just talk. If it ain't happened to you, I have never spoke with one client who had a justifiable reason or made any logical sense to me as to why a policy was not paid. I don't have no reason to defend because at the end of the day, I have family members and close friends who invest their monies in these policies, and myself. I have spent over $1,000 a month on insurance policies. So it has to make sense, and I'm not exempted from it. I'm only an employee. But what I'm saying to you is don't go on the premise of what other people say. Make sure it happened to you. You are in that position before you go, because that is the reason when you talk with so much conviction, you know, it makes people believe that, hey, boy, she must have a point. But I've been in the industry for almost 10 years now, and I know what is happening and why the reputation is so bad. I'm not saying that we haven't dropped the ball in some areas, but it's nowhere as close as to what persons make it.
So how about
Man, you
I've
need
been
to do your
paying
policy
insurance
share.
from I was 18, that's over 20 something years ago, and I've never claimed.
So what that has to do?
I'm just saying, you have
your policy. You have a contract for your policy, Denise. A lot of people like say I had this policy for 30 years. It does not matter if you do not abide by the terms in your contract. We cannot honor anything else. What are you looking for? I've been paying
just
for my
all I'm saying to you is calm down. All I'm saying
I know
to
I
you
just
is
talking. I'm very passionate.
Yeah, I could see that. Very passionate. I see you love your job.
No, I love my job. I love anything that I represent and stand by. It's not my job. It ain't about the job. When I fell in love with an insurance company, was the first day I delivered a check to a grieving mother for a 6-year-old child. So it isn't about the job. It's about what I do. Yeah, it's not the job. Because family guardian could tell me tomorrow, go home. It's what I do.
That's true too. Go home.
Go home. It's not what I do. I love what I do, not the job. Help people.
Yeah. However, the jury is still out as to which of the two.
How? I think insurance win that hands down.
Yeah. Insurance is, you know, it's good though. I can tell you, we help more people than we hurt. I'll tell you that much. When you could deliver.
That's a little more refreshing to hear.
Yeah, we help more people than we hurt.
Okay.
I can tell you that much.
That's the motto. We help more than we hurt.
That's the fact.
All right. So let me say something on a non-insurance note. Please, anybody who has homework for me, send me my homework. And please go ahead. If you haven't read the chapter on inventory completely, go ahead and do that. And then go on to the next chapter, which is? Anybody knows?
Next one.
What's the next chapter in the schedule?
Chapter 10?
That's receivables.
Is it chapter 10 or chapter 9?
Chapter 9.
I think that's receivables, yeah.
That's chapter 9.
Yeah, go on to the next chapter. We have, this is week number 9.
Number 11.
That means week number 11. That means we have 2 more classes before our final exam. So next week, we'll go into the next chapter, and then depending on how that goes, we'll go into our final chapter, which is chapter 10. I promise I wouldn't go over chapter 10. So we have 2 more classes to finish those 2 chapters. So read as far ahead as you can, and then we'll pick it up next week.
And do we have to go to 10 chapters, not 9 or 8? I'm just asking.
We don't have to.
That's Crystal.
Yeah, man. You know, asking for a friend.
Sounds
like you work for an insurance company.
God, boy, you really ain't my friend. I take that one. Denise said, calm down. Calm down. Calm down.
Crystal, I get your point completely. Next week, we'll pick it up and we'll see how it goes. Okay?
Yeah.
I'll go as far as it's reasonable without having to force anything extra down your throat.
Yeah.
The question, Mr. Wilkinson, has the final exam been set as yet?
Written? You mean written?
Yes, written, yes, my bad.
Written? No, not yet.
Okay, cool. All right.
Only in my mind's eye, it's been written. Okay.
We'll continue
So,
promise now. Same format as the midterm. Let's stick with that format and help us as
well,
always.
actually, you guys have not really done too badly, especially for first-time students. And that first exam was not necessarily an easy exam. So those persons who didn't do that well and looking to make it up with the makeup in the final, not to worry. It was not necessarily an easy exam. It was especially unfriendly to anybody who didn't like really commit. So if you didn't really commit the first time, then you want to really commit the second time. But yeah, most persons in the class did, somebody got 80, which is a very high grade.
Awesome.
Yeah,
Thank you.
that's a huge
I wish
grade
that
for
was
that
me.
exam. Okay, for sure. And then somebody got 70 something, 60 something. Two people got 70 something. Two
I
people
needed
got
that 80.
something. So yeah.
I hope one of them 70s is me. Thank you.
More yes. So for a first time exam, and it was not an easy exam, you guys on average did pretty well. All I can say, whatever methods you used to study the last time, do that and more. Stay on top of your game. Practice, practice, practice from each chapter. Study the stuff that's in bold print with things mean. You know what I did the first time. So, and be ready.
And we have
And
less short answers.
Do we have to do all the chapters?
Y'all is up Melissa.
Yeah, like all the chapters from chapter 1, Mr. Wilkinson saying
remember
that we had a
No.
midterm.
6 to 10. He said 6 to
remember,
10.
6 to 10.
I said that the final exam will not be cumulative.
Oh,
From 6
I'll be better, Crystal,
Yeah.
awesome.
Awesome.
Okay.
Good stuff. Good stuff.
only responsible from 6 to 10.
Awesome.
it.
Awesome.
All right. So
Okay.
just immerse yourself in all that crap until it's over, and then you can go back and kick back and get ready for accounting too. How's that?
Well, yeah, on that note, yeah.
For those of you who are thinking about doing accounting too, I suggest you do it the next semester. Do not wait.
When's the next semester?
Wilkinson trying to cause me be bald by summer. That's all I have to say.
That's okay. You can grow your hair back by Christmas.
Don't be like a Will Smith, and if y'all watch the Oscars.
Oh, hey, that's hold on. That's a competition for another class. That's a competition for another class.
Don't even touch that dial right
Don't
now.
touch that.
That is the next week's discussion.
Mario, come with your notes next class, please.
Yes, please. Everybody bring your notes on the Will Smith dilemma.
Oh my God.
I shall.
See you guys next week.
Bye.
Have a good evening.
Bye. Bye-bye now.